when you leave a group of any people, right, Bobby, without access to basic needs or the ability to kind of chart their own way forward, then because people elected Hamas, right, 17 years ago, to lead. But
they did,
it gets to the core of the problem.
Yeah, so that's another accusation that is often thrown at the people of Gaza. Oh, you elected Hamas. You made your bed, you've got to sleep in it. So there are some things to consider there. When that election was held in 2006, Hamas, the choices people had were between a corrupt and inefficient Palestinian Authority led by Fatah, which is a different faction, and Hamas. And Hamas at that time, the campaign was an anti-corruption campaign. People were voting against Fatah just as much as they were voting for Hamas, and it was all about corruption. So that's one thing to consider. The other thing to consider, it was 17 years ago. The vast majority of people who live in Gaza today never got a chance to vote. There's never been an election since, and Hamas has ensured that there will never be another election in Gaza as long as they're around. So the vast majority of people who live in Gaza today, who tend to be young people, did not vote for Hamas. They were born into a place run by Hamas, or they were children when the last election were held and not eligible to vote. So it's again, another accusation that's thrown against them. It's an unfair accusation. The people who live in Gaza today are not responsible for Hamas. They didn't vote for them.
To what extent is Israel responsible for Hamas coming to power there?
Well, there's a large body of credible reportage by credible news organizations that show that over a 20-year period, Israel, and particularly Prime Minister Benjamin Netanyahu, has encouraged the growth of Hamas as a way of dividing the Palestinian opposition to Israel. So supporting the Palestinian Authority on one side and Hamas on the other side to counterbalance the authority of the PA. And now this policy of supporting Hamas over a long period of time has come back to bite the Israeli population, not Netanyahu so much, but ordinary Israelis. So this is a group that certainly in its early days was nurtured by Israel, and thereafter that responsibility was taken up by Iran, which is implacably opposed to Israel. Iran is now Hamas's main, probably only real supporter. Iran provides money, arms, training, diplomatic cover for Hamas. And Israel may rue the fact that 20 years ago, when they had an opportunity, they chose not to sort of side with the Palestinian Authority in defeating Hamas, but that ship has long since sailed.
So what I got from your column by the end, Bobby, is that Gazans, they need the world to help them in this pursuit, because they alone cannot rise up against Hamas in terms of trying to get fair representation and a leadership that takes care of them. And so as a result, they're left in this really difficult spot. Is that fair, that it just points to the world and the responsibility of the world in this conflict?
Well, they need opportunities. They need space to develop other political institutions, other political organizations, and they need choices that they can vote for. If the choice comes down to between the Palestinian Authority and Hamas, that's not a choice anybody would like, not you, not me. So least of all the Palestinians. So, it's an unfair situation that the world has to come and solve their problems, but the wider world was complicit in creating these problems. And there's a certain responsibility. Now, we can hope that at the end of this war, and let's hope that comes quickly, that the world community will treat the aftermath differently from previous occasions. That this time, we're not simply going to look the other way when Hamas once again, either as Hamas or in a new iteration, takes over Gaza and retains control. Let's hope that this time there is a political process that allows Palestinians to breathe freely and express themselves freely, and that when they do that we will respect the decisions that they make. We failed that task a couple of times in the past. let's hope we are smarter this time.
All right, good. Agreed. Bobby Ghosh, Bloomberg opinion columnist there back at Bloomberg headquarters. All right, let's get a check on world and national news headlines. With that, Michael Barr.
Thank you very much, Carol. Tim, today marks 1 month since the Hamas terror attack on Israel, triggering a deadly war. Israel's prime minister telling ABC News he is open to little pauses in the fighting to get hostages out and aid into Gaza, but no general ceasefire without release of all the hostages. Benjamin Netanyahu was asked if he had any warning for Iran and Hezbollah.
I think they've understood that if they enter the war in a significant way, the response will be very, very powerful, and I hope they don't make that mistake.
The U.S. and allies try to keep the conflict from spreading. In London this morning, King Charles delivering his first King's speech, the first in 73 years, to Britain's Parliament. It marks the official start of the parliamentary year.
The impact of COVID and the war in Ukraine have created significant long-term challenges for the United Kingdom. That is why my government's priority is to make the difficult but necessary long-term decisions to change this country for the better.
King Charles also called for supporting the cause of peace and stability in the Middle East. It is Election Day in several states and cities. In Ohio, voters will decide whether to amend the state constitution to protect access to abortion services. There are some gubernatorial races as well. In Kentucky, incumbent Democratic Governor Andy Beshear is looking for a second term in his Republican-dominated state. His challenger, Republican Daniel Cameron, is the first black nominee for governor. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After a 6-day advance, the S&P 500 a little changed, up 0.3% right now. Oh, the equities have rallied this month as bond yields retreated. There are bets that interest rates were peaking. On the earnings front, Uber delivered a forecast for bookings profits that topped analyst estimates. And right now, shares of Uber, they are up about 0.2%. KKR reporting third quarter results that beat Wall Street estimates. KKR shares right now up over 5%. Ben Laidler of eToro, he sees further gains for stocks ahead.
A year ahead repositioning rally, I think, is still to come as people refocus on a better 2024 and, throw in the restart of buybacks. I think it's going to be a good fourth quarter.
WeWork listing $19 billion of liabilities, $15 billion of assets in their bankruptcy petition. Right now, the S&P 500, 14 points higher. That's up 0.3%. We are at 4380 on the index. The Dow Jones Industrial Average up 75 points. NASDAQ 100 right now, 130 points higher. The benchmark 10-year yield is 5 basis points lower. That's right now is at 458. And something new coming from Heinz. Pickle-flavored ketchup, or ketchup, that's how I say it. It'll begin rolling out on grocery store shelves next year.
You put pickles on your
I want my ketchup
anyway.
to taste like ketchup. I want my pickles to taste like pickles. Why do we have to make everything like a
Because
mush?
a lot of people, sounds like a lot of people want a different type of
It's
ketchup.
like baby food eating. Like, how you mush everything together for
it
babies?
all ends up in the same place.
You don't know what you want.
The stomach. I know.
I know exactly what I want, John Tucker.
And it's just regular old ketchup.
Exactly. Come on. Anticipation, Heinz. But I want it organically grown.
Do you want private equity?
Everybody wants private equity. John Tucker, thank you so much. Private equity. We talk about it so much. We've been at Milk in the last couple of years. It's all about private equity. That's just what everybody wants to invest in, the returns. It's been an asset class that's really been reserved for public pensions, endowments, institutional institutions, institutional investors as well, really the high net worth individuals and the like. But that could be, Tim, about to be changing.
Yeah, the industry right now racing to secure a share of the trillions of dollars in wealth held by the rising suburban rich. These are the so-called mini millionaires. And Carol, there are a lot of them. We're talking about people who are worth between $1 million and $5 million. It's a segment of U.S. households that jumped almost 60% in the 15 years to 2022. So that's 12.7 million households. That's according to the researcher CEG Insights.
It's like the millionaire next door. That's what it's about. Let's get into the story. It's in Bloomberg Business Week. Let's get to Bloomberg News asset management reporter Lokia Giftapulu. She is on Zoom from London. This is a great story. Everybody seems to be, Lokia, all in when it comes to private equity. Take us to this Greek restaurant in New York City, Midtown Manhattan. Tell us what was going on. This was in September.
Although I'm Greek, I wasn't actually in the restaurant. I don't think any of us were invited there. But
Darn.
I was not really surprised to hear it was a Greek restaurant, actually. But the point, I guess, is that there is this effort to approach people private equity hasn't approached before. So usually, these guys have big relationships with the big institutions, and they get large mandates from them. Now they're going down the market and they're trying to approach thousands and thousands or even hundreds of thousands of people through financial advisors who don't necessarily know much about private equity. So they do these big dinners, they do these educational events where they invite them all there and they have senior people speaking to them and try to explain basically what these products are, why they're different from funds that you can trade every day, and ultimately, of course, promote their own products and get a slice of these huge markets.
Well, it sounds like a great opportunity for the private equity managers because it opens a lot of potential to them. The question is, Lokia, is it a good opportunity for the mom and pop millionaires next door?
That's a big question, and I guess it depends which side of the trade you speak to. So obviously, private equities is a huge opportunity. The relationships with the pension funds are still there, but these guys are not investing so much anymore because of, they don't have as much money to allocate to private equity, and the tens of trillions in the retail market, the mini millionaires, as we call them, is enormous. They only have 1% allocated to private assets. So sure, for private equity is great, and maybe for the mini millionaires it's also good, so long as they understand what illiquid means and that they can't get their money back anytime they want to. It's a big conversation, and I think private equities, that's why they're constantly saying they're educating people, because people need to understand that this is a product where you put your money in, and then if you get ill or if you divorce or if you want to go on a big holiday, you can't just sell shares and take your money out and use it. It might be locked there for a while.
But Lokia, this is also about educating financial advisors, like registered investment advisors who have access, the direct pipeline to these higher net wealth or wealthy individuals, right? About teaching them about it so that they can kind of present this as an opportunity to their clients.
Yeah, that's the main effort right now, and this is kind of the Greek restaurants, the big events. Carlyle has this event where they take David Rubenstein on stage to, meet and greet the advisors. Obviously, that's a big treat for them. Others take them to the US Open, they have steak dinners, or they just do kind of more sophisticated educational events. I think it's to the advantage of the private equity companies to actually spell out exactly what this means, so that if they get this money in the funds, people don't find themselves kind of in a surprise where, oh, but I want this money and I can't have it back. Their financial advisor would need to understand very well what this means to explain it to them.
So the question that I have is about asset allocation here. And we hear about 60-40 portfolios in the context of 60% equities, 40% fixed income.
Where does this fit in?
Yeah, so I'm wondering, I know, and all this stuff depends on someone's time horizon, and time horizon is very important when you're talking about private equity money that potentially could be locked up and not available for years. But what are we talking in terms of how much of someone's portfolio these folks, these financial advisors, are going to be locking up in private equity?
I don't think that's clear yet, because the allocations are so low. They're like 1%. For those with less than 1 million is basically zero. The hope is that this 1% will become, one of the person we interviewed for the story said it, they're hoping that over the next decade or even maybe more, it will become 10 to 15%. But that's on average. That's not for every single portfolio, because ideally the financial advisors would have bespoke or risk-rated things. I'm not even sure they know how they're going to do it yet, because this is so new. If you see, like, the current allocation suggests that this is not already happening to great extent. So I think this is probably work in progress. I'm not sure there is a kind of golden number for where that's the right 4% is the right amount for private markets allocation. It would depend on different types of clients and on the risk they want to take on, and on how the liquidity needs they have. But I don't think anybody would be able to answer these questions with certainty right now.
It's really fascinating because within the story, just to kind of sum up, because we talk so much about what's going on in the U.S. Treasury market, right? You can get a decent yield, but you guys note that last spring, Apollo attended a dinner for financial advisors at Smith & Wollensky in Manhattan.
It's not far from us.
No, but they talked about how private credit can replace bonds for investors. So this idea that you're going to put your money away for some time, got to be patient, but there's returns. But again, you have to be comfortable with kind of leaving it.
Talking about U.S. government bonds or corporate bonds, because there's different risk factors there,
That's a really good point. Do you think it's corporate bonds? What are they talking about?
I mean, I don't know how you can replace full faith and credit.
I don't know. It's really interesting. Listen, a fascinating story, but it's definitely a sign of the times, a trend. Private equity. Lokia Giftopoulou, thank you so much. Bloomberg News asset management reporter joining us on Zoom from London. This story, by the way, in the upcoming issue of Bloomberg Business Week magazine on newsstands on on Thursday on the Bloomberg terminal already, and of course at Bloomberg.com/businessweek.
All right, let's get an update on company news. We got Steve Rappaport in the Bloomberg newsroom. Hey, Steve.
Good morning. WeWork is moving to dump dozens of pricey leases in New York City after going bankrupt, Bloomberg's Gina Cervetti reports.
The former high-flying startup filed for bankruptcy, listing almost $19 billion of debts. The New York-based co-working company said it had struck a restructuring agreement with creditors and would streamline its rental portfolio of office space. At one time, it was the biggest office tenant in Manhattan.
Thanks, Gina. WeWork has already stopped operating in and moved out of most of the co-working spaces that it hopes to exit. Starbucks stirs an uproar by increasing wages and benefits for only part of its workforce. More on that from Bloomberg's Law, Parker Purifoy.
Starbucks announced its plans to bump up wages and benefits for workers nationwide, but it is leaving out unionized workers and workers who are planning to unionize or in the process of unionizing out of some of the new benefits. And the union has vowed to file charges with the National Labor Relations Board in response to that.
Bloomberg Law's Parker Purifoy, a National Labor Relations Board judge ruled Starbucks violated federal labor laws by excluding unionized baristas from nationwide wage increases last year. The coffee chain is appealing that decision. And the FDA gives Elon Musk's brain implant startup Neuralink the green light to seek a volunteer for its first human clinical trial. But before signing up, you should probably know this. A chunk of your skull will be surgically removed, so a large robot can insert electrodes and super thin wires into your brain. Elon Musk had projected that trials would begin in 2020. He made that prediction back in 2019. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
listening to Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Let's get a check on the latest world and national news. For that, it's over to Michael Barr. He's in our 1130 newsroom in New York City. Michael.
Thank you very much, Carol and Tim. This is Election Day in most of the U.S. Bloomberg government reporter Jack Fitzpatrick has more on why this one matters.
Well, there are a ton of ballot measures. Ohio's measure to add to the state constitution a right to reproductive freedom. Texas has a measure that would essentially preemptively say no to any kind of wealth tax. And so there's broadly a trend of votes that people can take that would go beyond what their legislators were willing to consider. And of course, you could look at it as a bellwether. Everybody's up in the state legislature in Virginia. We don't know how that projects to 2024, but it's a lot of races to watch, at least, to say the least.
Bloomberg government reporter Jack Fitzpatrick in Washington. The Supreme Court is hearing a case about gun control laws. The justices are taking up a challenge to a federal law that prohibits people from having guns if they are under a court order to stay away from family members. The special counsel overseeing the investigation of Hunter Biden is set to testify before lawmakers on Capitol Hill today. Special counsel David Weiss is set to appear before members of the Republican-controlled House Judiciary Committee. They have sought to ramp up their impeachment inquiry into President Biden and bolster allegations that Weiss did not have full authority over the investigation of the president's son. In London this morning, King Charles delivered his King's Speech to Britain's Parliament, marking the official start of the parliamentary year.
It is mindful of a legacy of service and devotion to this country set by my beloved mother, the late Queen, that I deliver this, the first King's Speech in over 70 years.
King Charles discussed the UK going through COVID, Ukraine, Israel, and easing the cost of living for families. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Carol, Tim.
All right, Michael Barr, thank you so much. We just want to remind everybody, looking at the markets, the S&P is up for a 7th straight day, so we're heading toward the longest winning streak since November of 2021. So, you heard the enthusiasm from Ed Yardeni. S&P continues that march higher.
Yeah, we're at a place now where the S&P 500 is highest that it's been since September, Carol, and just a week ago, we were at its lowest since May.
One investor who's doing really well, easily outpacing the market, is Adam Gold. It's not somebody that we talk about a lot. He's kind of under the radar. He's got a fund, Deep Growth Plus.
It's not a big fund.
No.
But it's done pretty well this year. We're talking returns of more than 100% year to date. Carol beating out all of its separately managed account peers in North America. That's according to data compiled by Bloomberg.
And all those folks who say NVIDIA is too expensive, well, he basically says, they say AI, the hype is overdone, blah, blah, blah. This portfolio manager, Adam Gold, as we said, trouncing pretty much all his peers this year, has a message: more gains to come.
Okay, but when I say small, this is small. The firm itself only has $12.67 million in assets under management.
It's small.
And his strategy has $11.75 million in assets under management. So far this month, up 7%, up year to date 130%. They've got a five-year record of 30%, all thanks to NVIDIA.
It's really fascinating. He says he's owned it since 2016. He sounds like a brother of mine. He was like, I knew about NVIDIA. I was reading about it years ago.
Is this your brother?
This isn't my brother.
Does your brother? Wow, the Massar family.
I'm so like, you're the one. Where were you when?
You're the one who gets to talk about all the people who are making money, and he's the one who actually makes money of the Massar children.
Sounds like it. Leave it to a contractor.
Wow.
Adam Gold, anyway, snapping up more shares in December. It is the fund's largest holding, and this was just as the stock was capping its worst year in over a decade. Mind you, it is still up. I think it's still the best performing name in the S&P 500, but it has pulled back. Concerns that the AI hope is kind of, AI hype, I should say, is overdone.
Okay, it's not all NVIDIA. He's also shorting Macy's and iHeartMedia, and then also he went long Rivian. It's been the worst performer among his holdings.
All right, there's some strategy. A little strategy talk for you on this Tuesday. All right, don't go anywhere. Tim Stenovec, Carol Massar, Bloomberg Business Week, our special event here in New Orleans. More from Wells Fargo in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, make it 7. We've got a rally. Stocks climbing to the highest level of the session right now. And you do have technology shares. They are in the lead as Treasury yields start to decline. Microsoft, Amazon, Apple, Adobe, Meta Platforms, they are the leaders right now. We have the S&P 500 15 points higher. That's up 0.4% at 4381. The Dow Jones Industrial Average 71 points higher, and the NASDAQ 100 up 151 points. That is a full 1% gain right now. Jennifer McCowan at Capital Economics says inflation is easing, and the U.S. may ultimately avoid recession.
It's clear that there's some softening in the labour market. Wage growth is coming down in the way that the Fed would really want it to. But there's not a collapse. There's no sign of a collapse in the labour market, of a surge in unemployment rates. So this is just the soft landing, really, that the Fed was hoping for.
Right now, the benchmark 10-year yield in the U.S., 5 basis points lower. That is at 4.58. The long bond, the 30-year, 6 basis points lower. That is at 4.74. Minneapolis Fed President Neil Kashkari telling Bloomberg's Michael McKee earlier, the Fed's inflation fight isn't over yet. And then union members targeting MGM Resorts, Caesars Entertainment, and Wynn Resorts in Las Vegas. Tens of thousands of food workers and bartenders in Las Vegas, they are threatening to go on strike. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
It's the year of the strike.
It is. Oh, my goodness, right? It just keeps going wider and wider and wider.
Workers have power.
Right, but after decades of declining union membership, right? And you're seeing workers out in full force. That's what happens in a tight labor market.
I think that's the question, though, if we keep a tight labor market.
Yeah, exactly. Hey, we want to point out, coming up this hour, we're going to get the voice of the New Orleans Saints at the Superdome. His job, though, is really about getting tourists back to New Orleans, spend some money. So we're going to talk to him a little bit later on.
And billionaires may want to colonize space, but do you know how cold it is on Mars? Do you know that there's no
colder than one of our
air?
studios?
Yes. I mean, I think it's negative 60 degrees. There's no breathable air. We're going to speak to the co-author of the new book, A City on Mars. This is going to be a fun one, Carol, because Elon may want to colonize Mars, but it's not so great up there.
No, there's some obstacles. We're also going to be joined by the president of one of the largest Black-owned banks in the United States. We are, of course, live at the Wells Fargo Black Business Leaders Summit here in New Orleans. We're going to get back to some of those conversations. They're having meetings all around us, but we're going to bring in some of the folks in just a moment. In the meantime, there's something that Tim and I have been pestering our producer, Paul Brennan, about. It's like, we want to talk about trade. We want to talk about global trade, those shipping containers and moving stuff around, because it's such a great indicator on what's going on in the global economy.
Yeah, factory activity, trade, and some of the world's biggest exporting nations actually show signs of weakness, Carol, heading into the final stretch of 2023. For us, it underscores how elusive a rebound in global commerce is actually proving to be.
Yeah, exactly. Value of China's exports usually slows in October for seasonal demand reasons. Government released some figures overnight, appeared to track that trend. The year-over-year drop of 6.4% was worse than expected and compares with a weak performance in October 2022. There's been a lot going on, though, that we've been talking about.
Yeah, so it comes after we learned last week that Maersk is cutting jobs. A story that you talked about a lot last week, Carol, the low water in the Panama Canal, leading to some potential shipping delays, taking it much longer for goods to get from here to there as a result of that low water.
And you said, here's the person we need to speak to.
Yeah, we got Bloomberg News trade czar Brendan Murray. And the reason why it's been so difficult to get him is because he's in London. It's very late there when our show's going. So now we're doing an earlier show. So we were able to convince Brendan to join us this afternoon. Good to have you with us, Brendan. How are you?
I'm doing well, guys. Thanks for having me.
So where are we right now when it comes to global shipping? And, you and I spoke a lot over the last few years when we saw lines of container ports, lines of containers, rather, and ships trying to get into the ports. That era has ended for the most part right now. We saw somewhat of a return to normalization, but where are we right now as we head into the final months of 2023?
Yeah, well, we're really at this turning point where the shipping companies, and you mentioned Maersk, are trying to game out how strong demand is going to be for next year, and it doesn't look good for them. So you need to remember where we've come from. We've come from the busiest, highest shipping cost period in recent memory. Ships were fully deployed. Companies like Maersk, were charging 10 times what they could charge now for a container. So things have more or less kind of come back into normal, and they're looking for how strong their demand's going to be next year. Is it going to be, are we going to see a 1% growth in global trade? Are we going to see 3 or 4% global growth in global trade? And it's looking more like the lower end of that range, something flat to maybe 1%, maybe 2% if they're lucky. So as we've seen in the price of Maersk shares, they went down 15% or more when they announced this news. 10,000 job cuts last week. So we're really in this period where things are kind of back to normal, and if we don't see the global economy pick up, companies like these will have gone from really boom times to bust.
So, Brendan, you know this, right? Maersk is definitely a global bellwether, right, in terms of what's going on with the world's economy. Having said that, I hear what you say, and I feel like this is with so many different companies that we talk to, that they're getting back to normal. The pandemic, everything stopped, and then everything was gangbusters, right, as more stimulus came in and people were home and ordering and so on. So are we just getting back to 2019 and more normal, and so that we have to look at this as getting back to normal, not coming undone? Or is it saying something about a slowdown that indicates potential recession, if you will, maybe globally? I mean, we've already started to see that,
Well, it depends on which region you're looking in. If you look across Europe, shipping volumes are a lot weaker than they are in the U.S. The numbers, like you cited, the Chinese export numbers this morning were surprisingly down in October. That was after September, when people thought we were going to see a rebound in Chinese exports. So it really varies depending on the region, and if you look at especially the European market right now, Germany is looking very weak. German exports have fallen for several months in a row, and so that's not a very good sign for Europe's biggest economy. The U.S. is holding its own. A lot of the numbers that we're seeing in terms of imports into the U.S. being obviously predominantly an importer as opposed to an exporter, are more or less back to 2019 levels. So not necessarily pointing to a recession, but kind of getting back into the more sort of slow, sluggish, kind of subdued growth range, the kind that you wouldn't look at and think are reflective of a strong economy.
So is it a good time for the Panama Canal water to be low, or not a good time for the water in the Panama Canal to be low?
Well, it depends on if you're the owner of the cargo moving, or you're the owner of the ships moving the cargo. So the Panama Canal restrictions have the effect of reducing capacity in the shipping market. So if ships have to go more slowly, they can only make so many trips, and so the capacity, container shipping is essentially the hotel business on the ocean. You want to keep their ships full, and they want, if ships are running full, then they're making good money. If they're two-thirds full, then they're not. So if the Panama Canal slows shipping down, so that reduces capacity, and it boosts the price of shipping. So a company like Maersk would see an uptick in the rates that they're getting. But if you're a company trying to plan out your inventories over the next 3 to 6 months, you're going to have to add on an extra week or two, and compound it for several months if you're going to be shipping through the Panama Canal. More likely, you're going to look for a more certain route where you just say you're shipping from Asia to the U.S. You'd ship it to the U.S. West Coast, and then put it on a train or a truck and ship it across the country, rather than bring it through the Panama Canal. If those delays, as we have reported, are going to stretch out well into 2024, as they look like they will.
Which means also potentially, right, higher costs, which someone's got to pay. So I just think about
Exactly.
the inflation story.
Exactly. This all just spells shipping. Delays like this just add costs. You look at other disruptions around the world, whether it's the war in Ukraine or not to jump from crisis to crisis, but the war in the Middle East at the moment, whether that widens or not, that just adds to insurance costs. It adds to there are shipping companies adding war surcharges on top of shipments like this. So all of these things, whether it's climate change, reducing water through the Panama Canal, or geopolitical disruptions, they just add costs. And as you said, the inflationary situation, puts a limit on how much lower costs like transportation can go.
Brandon, I know the answer to this question is very route dependent, but again, when we were almost speaking to you daily during the shipping crisis just post-COVID in 2020 and 2021, where it was so expensive, especially for small companies, to actually get their goods from, let's say, I don't know, Africa to Europe or Africa to the U.S., container prices had gone up so much. Where are we right now with those prices?
Yeah, they more or less are back to where they were in 2019. There are some routes that are have a little bit of a premium on them, but it's very cheap right now to ship things. There's a lot of spare capacity. The shipping companies used a lot of these windfall profits. I think the total that I saw recently was the shipping lines made $450 billion over the last 2 years, and they've spent a lot of that money on new ships. So new ships come online, that just adds to capacity, and and so they've got to sell all that space, and the price goes down. So that is the gloomy outlook that we heard from Maersk the other day, is for the next 18 months to 3 years maybe, there's just going to be a lot of excess shipping capacity, which will help consumers and importers, retailers, and manufacturers to some extent. But they've also got these, the shipping lines are also transitioning from fossil fuel burning ships to cleaner fuel burning ships. So they have to spend money on those conversions. And so there are inflationary pressures working in both directions that we'll see over the next year or two.
Brendan, I feel like when we talk about trade and ships moving around, there's China and then there's everybody else. But I'm curious, you're the expert, you're the trade czar. Like, how do you kind of look at the global world of shipping? And do you do like kind of lump China in one little group, one big group, if you will, and then everybody else? But it is so important to watch what's happening with China because of their role in the global economy and manufacturing so much, and so much goes through them.
Yeah, absolutely. I mean, we hear a lot of re-globalization talk and deglobalization and nearshoring and decoupling and all these terms that describe some sort of fragmentation of the global economy. But the reality is that China has such a well-oiled factory economy, transportation, logistics economy, that there's only so much you can do from Vietnam or Mexico, these alternative places. So the folks that I talk to and the things that I see in this area suggest, yeah, there are certain things that you can make in other parts of the world and have shipped to you at a comparable cost. But there's only so much, there's only so far you can go, and that China will remain, a key hub for manufacturing going forward. That's not to say they won't see certain sanctioned goods, shift to other areas. The U.S. has incentivized a lot of semiconductor production, a lot of electric vehicle manufacturing, supplies back to the U.S. so that you're a U.S. trading partner. So there's a certain amount of reorganizing or rewiring that we're seeing in the global economy. But the main shipping routes that we've seen over the past few days of shipping from east to west, from Asia to Europe and the U.S., don't look to be changing in any huge way anytime soon. But we're seeing some subtle shifts, and we're trying to cover that the best we can here at Bloomberg.
What are some permanent changes? It's hard to use the word permanent. I don't want to say that, but what are some fundamental shifts about when it comes to the world that you watch, the world that you report on, that have occurred since the pandemic? Like, how are things different in your world versus 2019?
Some of the more permanent shifts are like we've alluded to, this reshoring, I'm going to build a factory in Mexico or Vietnam or Morocco, and I'm gonna insulate myself against too much concentration in China. So some of those are definitely permanent. Companies don't just build a manufacturing facility for a return that they're going to get over the next year or two. They do this over 10 to 20 year horizons, and so those are the structural kinds of changes that we're seeing. There was a lot of talk about how this just-in-time inventory system was becoming just-in-case inventories, where we would see companies carry a lot more inventory. It would be more costly. Some of that isn't really panning out. So, and we're seeing companies go back to more lean inventory kind of situations now that we're, kind of through the pandemic, and you can kind of see on the other side of all the disruptions that the pandemic caused. So, some of these changes are definitely permanent, structural, and but some of them we're seeing that were just adjustments that companies made during the pandemic, and they're kind of going back to the old way of business.
Hey, Brendan, we just have about 45 seconds left here. You have a story, though, on the Bloomberg. Before you go, I wanted to get to the latest monthly logistics managers index came out, and the headline on the story, U.S. inventory correction looks to be over, according to this index, with smaller companies building up goods again. Just 45 seconds, the significance of this.
Yeah, so it basically punctuates a turning point where we saw a lot of inventories built up through the pandemic. Companies got nervous, so they padded their shelves with as much as they could get, because they didn't know when they might get another order shipped to them. And we've gone through probably 10 to 12 months of inventory runoff through most of this year, and as we see out of this indicator that was released today, that inventory correction, that runoff of inventories, has turned the corner, and companies are now rebuilding inventories. Now, some of that is pre-holiday, but it's also a sign that that we're going to see demand for goods shipped around the world could potentially start to pick up again as companies say, okay, inventories are lean enough. We need to restock.
Yeah, economic momentum. I love logistics indicators. Brendan, thank you so much. So appreciate it. We've been dying to do this story. Bloomberg News trade czar Brendan Murray joining us right now on this Tuesday. You are listening and watching Bloomberg Business Week. Carol Masser along with Tim Stanovic, and this is Bloomberg.
From Bloomberg World Headquarters, I'm Steve Rappaport. WeWork is working to get out of dozens of leases now that the company is bankrupt. Bloomberg's Amelia Pollard reports.
WeWork signed on a bunch of leases kind of at the peak of the market, before the pandemic. And the only way to cancel those leases really is to file for bankruptcy, because that gives you blanket protections in the U.S. to get out of those leases. So, today they announced that they're immediately trying to get out of 40 leases in New York, almost 70 nationally across the country. So I'm sure there'll be more waves to come, but that's the first jump at the lease exits.
Bloomberg's Amelia Pollard reporting. WeWork has already stopped operating in and moved out of most of the co-working spaces it hopes to exit. Tesla is raising prices on the Model Y in China after rolling out an updated version of the SUV. Bloomberg's David Welch has more.
Tesla's trying to get some price increases after they've dropped them as much as 30% over the past year. And in China, they might be able to do it. The Model Y has been refreshed, so a bit of a newer product. It's one of the best-selling EVs. And also in China, you've got so many government incentives and programs pushing EV sales. It's not like in the U.S. where we're seeing this slowdown in sales growth and everybody's struggling to maintain price and maintain volume. It's more a matter of, they think they can get some of this pricing back because the market may let them do it.
Thanks, David. Shares of Tesla are currently down less than 1%. And Planet Fitness stock soars more than 13%, bolstered by third-quarter earnings per share that beat estimates. The New Hampshire-based gym chain also raised its revenue forecast for the full year. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. A rally in tech has stocks on pace for their longest winning streak in about 2 years. S&P 500 rising for a seventh straight day. You have Microsoft, Apple, and Amazon all among the leaders right now. They're higher as we see Treasury yields lower. The 10-year yield 5 basis points lower. That is at 4.58 right now. Well, U.S. households tapping their credit cards more in the third quarter. The Federal Reserve Bank of New York says in a report this morning, household debt has increased by $228 billion last quarter. S&P 500 right now up 14 points. That's a rise of 0.3% at 4380. The Dow Jones Industrial Average 70 points higher. That's up 0.7%. The Nasdaq 100 147 points higher. That is up a full 1%. And we check the markets with you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
To talk about the history, the heritage that is New Orleans, that has really gone through a lot, to say the least, in the last, I feel like, 10, 20 years. And when he starts speaking, you may recognize the voice of him. That is, if you've ever been to a game at the Caesars Superdome. He is the voice of the New Orleans Saints. His day job, also interesting. He's Senior Vice President and Chief Marketing Officer at New Orleans & Company, the official tourism and destination marketing and sales organization for the city. So he and his team are responsible for bringing in business, bringing in tourism to the city, like the upcoming Super Bowl, Tim.
Yeah, he's the one who got us to spend so much money on dinner last night.
Thank you very
No,
much.
it's because you and our producer ate so much, but I'm just going to put...
Well, welcome to Carol and Tim.
Thank you. That's Mark Romig, Senior Vice President and Chief Marketing Officer at New Orleans & Company. How are you?
I'm doing well. It's a beautiful day in New Orleans.
It is a beautiful day in New Orleans, but it's a city that definitely needs some help.
Well,
right?
you know, we're 304 years old, or I should say 304 years young, and we've been having a lot thrown at us, but we always tend to take it well and just get better.
Well, remind everybody, I mean, Katrina, financial crisis, the pandemic. I mean, cities around the nation are still trying to find their way back. We talk about it in every conversation, Mark, everything. It's like, are we back to where we were pre-pandemic?
Yeah, 2019 is like that benchmark year we're all looking at. We're very close to being back to 2019 and being even better because we were 19 plus million people visiting that year.
But you're not quite there yet.
We're not there yet, and we didn't think we'd be as far as we are now, and I think a lot of destinations will say the same thing. We're now over 17 million people back, spending almost as much as they spent in 2019, and we knew that the entire industry, really globally, was going to take some time. People were pointing to 2025 as the recovery year, but I think we're on track to do really well.
What do you think's taking so long?
I just think the fact that this just didn't happen to one destination. It happened to every destination. So there's all that competition out there for the same dollar to come to that individual city. We're doing our part on the association and convention side as well as the leisure visitor side. Thankfully, our festivals are back and really getting stronger and stronger, and we're seeing really great weekend activity. Where we really want to push hard is that Sunday through Thursday activity, because not being a, quote, corporate type city where we have major businesses located here, those are coming back as well. But we want to rely on our leisure visitor as well, while the convention and associations are starting to come back and very strongly.
The culture, the music, the food. When you come here, you almost feel like you're in a different country. And that's part of what I love about New Orleans. Having said that, what are the things that move the needle that really give you long, sustainable economic momentum?
Well, we just did some consumer research, and it shows that music and food are the two drivers for the most part. A most unique culture. You're not going to find the variety of cultural assets in any other community, and we feel like that's an important selling point. The whole idea about live, work, and play, why not come and live in a city that provides you so many opportunities where you can be in your hybrid workstation in New Orleans and have all the things that are happening, the museums, the outdoors, the fact that you've got a festival every weekend where you can enjoy each other's company and hear great music and great food. and still get your job done.
Right.
So there's a big push right now, and we're working very closely with
Why
GNO
don't
Inc.
people want to be living in the city, like work, live, play in the city?
Well, I don't know why. They should. My vote is that they come here and they'll have a full life in New Orleans. We've got a great industry of like-minded people who are really pushing hard to put that message forward. And so we're excited about it. We've got a lot going on here. The new aquarium, the new insectarium. We've got the Superdome going through $500 million renovation, getting ready for the Super Bowl.
Yeah.
The Saints are playing there now. We fortunately just won this past weekend. We beat Chicago. I'm sorry for our Chicago listeners, but it was a great game. And the riverfront development is continuing. There's a lot of forward momentum. And, you know, just down river, east of us, we're building the rocket ships that are going to be taking us to the moon and Mars. So there's a lot of innovation in New Orleans, too, and that's important to know.
Yeah, talk to us about some numbers behind what drives the economy here. So when we're talking about your world, you guys are really bullish on conferences. Do you see more growth there than tourism?
Very much so. In fact, you know, the whole meeting industry has changed their outlook. I think the whole hybrid situation forced a lot of associations and organizations to think about how we're going to be meeting differently. Our convention center is going through another major renovation restoration with 140-plus meeting rooms and an outdoor space, and that's keeping up with all the other convention centers that have popped up around the nation. But we know when people come and meet here, they meet here and they get their business done. But they're also enjoying so much more of the city. And so that's one of our unique selling points. We are truly built to host, and we're using those words to say that New Orleans is a city that has the infrastructure, 26,000 hotel rooms within a 2-mile radius, the nightlife, the day life, and the fact that you can get your work done here. And so we just feel like, look, there's a lot of competition out there, but we've got the best convention services team in the country, we think. And they're out there working each and every day.
What about the right partners? I know Caesars has gotten very involved in New Orleans, but what's really key?
Well, having good partners like Caesars. They're going to be opening up their Nobu Hotel next year. Having partners like the nonprofits, which are big in our city, like the Audubon Nature Institute. The National World War II Museum just opened the Liberation Pavilion just last week. We had...
Saw an ad for that.
Yeah, the likes of Tom Hanks here and Robin Roberts and Wendell Pierce, part of the Congressional Medal of Honor Society convention that occurred during this opening. And so we have these opportunities for people to come learn, be educated, and, of course, enjoy the New Orleans variety that we have to offer.
You mentioned rockets that are going to take people to the moon. And Mars, or just the moon? What do you think?
And Mars.
Okay, eventually.
Yeah.
We
Mars is our subject
today. We got
today.
a guest a little later.
We have a guest a little bit
I
later.
don't want to preempt that, but again, it just speaks to the innovation.
That's what I wanted to talk about. So apart from tourism and apart from which is your world and getting people to move here, what are the industries that drive growth here?
Very large medical industry.
With Tulane Health Center?
Tulane Health Center, part of LCMC, Ochsner Medical Center, very large institution, a number of hospitals in the area. Education is huge here. We've got a number of universities. We've got both Southern University of New Orleans. You've got of course, Xavier University, Tulane University, Loyola University, Holy Cross College, Delgado. So a number of institutions supporting the higher ed. The Port of New Orleans is building another state-of-the-art container facility just downriver. That's going to be tens of thousands of jobs that are being added to the area. Shell Oil Company just announced a new building right next to the convention center. That was very good news for us. And again, it speaks to the position that New Orleans has in the oil and gas industry, centrally located. Lots of jobs depend on that. And again, what all that does to us is it's bringing people into the city, whether it's a university, whether it's Shell Oil or other oil and gas. Insurance is also a big player here. And the fact that the tourism industry, we believe, is sort of like the front door. You need to visit a location before you decide you're going to visit or do work there. So we're always available, and the door is always open, and that's why we say New Orleans is a most welcoming city.
Mark, it sounds like, I'm going through the list, healthcare, hospitals, education, hospitality, leisure, rockets or launching, NASA, ports, energy. That's a lot.
It is
that
a lot.
Should be such an incredible economic dynamic.
And
so what has held anything back?
You know, I don't. you're going to see me as a very optimistic
No.
individual.
And I love the optimism.
The fact that New Orleans
But I
plays.
walk around the city, just like New York, I see a lot of vacancies.
There's some infrastructure that we're working on, and it needs to be fixed. We play in a regional footprint, right? There's Orleans County or Orleans Parish, as we call it.
Yeah.
But we're part of really a 10-parish area that feeds off of all the business coming into the city, working closely with G&O Inc., Michael Hecht and his team there. But again, we know that there are issues like every other urban center, but we're focused on doing what we've always done, and that is finding the solutions and making it better.
All right. Well, let's continue with you, and hopefully we'll check back in a few months. Love to hear
Thank you,
how the
Carol.
progress.
Thank you, Tim.
You hit the road a lot, so come visit us when you're in New York.
I'll do that. Thank you, sir.
You got to bring some of New Orleans with you, though. All right, everybody. That, of course, was Mark Romig, Senior Vice President, Chief Marketing Officer at New Orleans & Company. We are broadcasting live from Wells Fargo's inaugural Black Business Leaders Summit in New Orleans, where they have gathered prominent leaders like Mark and of the Black business community as well that we've been talking to. We're engaging in a lot of meaningful conversations about what can be done, what needs to be done in terms of inclusion, certainly within the financial community, but also about bringing some more economic dynamism, I should say, to New Orleans. It sounds like there's a lot here.
I should note our coverage continues over the next 90 minutes from Wells Fargo's inaugural Black Business Leaders Summit in New Orleans. Let's now get a check on the latest world and national news. Michael Barr is in the Bloomberg 11:30 newsroom in New York. Hey, Michael.
Thank you very much, Tim and Carol. This is Election Day in much of the country. Dozens of ballot initiatives in a handful of states could paint a picture of how voters are feeling heading into next year's presidential vote. Bloomberg's Anne-Marie Hordern has more from Washington.
Potentially, you can see in some of these off-year elections, is there any sort of referendum against what is going on here in Washington? But of course, there's a lot of single issues that are also being fought on these ballots, abortion being one of them. In Ohio, there's going to actually be an initiative to enshrine abortion into the Constitution in Ohio, into their state constitution. So it's going to be interesting to see the results of this and what potentially they can tell us in terms of reading the tea leaves about next year's general election.
Bloomberg's Anne-Marie Hordern in Washington. Donald Trump is getting richer, with the former president on trial in New York accused of inflating his wealth by billions of dollars for more than a decade. The question of how much he's worth is as relevant as ever. According to the Bloomberg Billionaires Index, the surprising answer is Trump's fortune is valued at $3.1 billion, up from $2.6 billion in 2021. He spent a combative day in court yesterday arguing about how he valued his assets. U.S. News & World Report is out with its latest rankings of the best places to retire, and Harrisburg, Pennsylvania, tops the list. Beverly Herzog, consumer finance analyst at U.S. News, says the magazine surveyed seniors to determine the most important factors for retirement and then crunched the numbers from 150 U.S. cities.
Consumers indicated that affordability was the most important thing. Now, that's not surprising given that housing prices are quite high and mortgage rates are so high.
Reading, Pennsylvania was at number 2. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with his Bloomberg Business Flash. We're seeing a rally right now, a rally in big tech especially. It's lifting the NASDAQ 100 1% higher right now. Microsoft, Apple, Amazon, Adobe, they are the leaders in the tech-heavy index, and this comes as Treasury yields are declining. The benchmark 10-year, 5 basis points lower, and we have the long bond, the 30-year is 6 basis points lower. That's at 4.74. Grace Peters at J.P. Morgan Chase says, you know what, interest rates, they've already peaked.
The data that we've had over the last week or so does very much point to the fact that we are at a turning point in rates. You know, we heard it from the Fed last week that we're making significant progress on inflation. We can't claim victory yet, but we're headed in the right direction for sure.
S&P 500 right now, 18 points higher, up 0.4%. The Dow is up 102 points. The NASDAQ 100, 170 points higher. That is a rise right now of 1.1%. On the earnings scorecard, shares of KKR, they're up over 5% right now. The credit business helped offset weaker private equity results in the most recent quarterly earnings. Then you have New York Mets owner Stevie Cohen partnering with Hard Rock International. This is a proposal to build an $8 billion casino and entertainment complex on a 50-acre parking lot in Queens, right next to Citi Field. He's vying with nearly a dozen other applicants for one of only 3 coveted state licenses to build a full-scale casino in Lower New York City.
Chosen yet, right?
Yeah, I hope you guys, by the way, are behaving yourselves, not gambling or drinking or eating too much.
No.
On your boondoggle.
Not until noon. Not until noon here, because then we're done.
You know where I saw drinking? At the Delta Sky Lounge
There's
at like
always
10:30 in the morning on my way out of here
There's
yesterday.
something about airports. Everyone's always
What is
drinking at
that?
7 a.m.
What is that? It's coffee time.
I don't know.
Apparently not. All right, John Tucker, thank you so much.
Well, we are broadcasting live from Wells Fargo's inaugural Black Business Leaders Summit in New Orleans, where they've gathered prominent leaders of the Black business community to engage in meaningful conversations. Our coverage continues for the next 90 minutes or so.
It does indeed. And so lucky and looking forward to our next guest. Typically, we talk to him on Zoom, but because we're in New Orleans, we actually came to his hometown, and we want to talk about the markets. Back with us is George Young, partner and portfolio manager at Villere & Company, joining us here on site in New Orleans. Nice to have you here in person.
He walked here.
I walked.
5
Walker,
minutes.
it's a beautiful day. We delivered you a beautiful day as you wanted.
I haven't been outside yet, but when I do go outside, I'll know that it's beautiful.
Your home city.
Yes.
You know it well.
Yes.
How would you describe New Orleans right now?
At this moment in time, it's perfect. Don't come here in August. This is the time to come here.
You mean weather-wise?
Weather-wise, yes.
But I just think about what New Orleans has gone through over the last 20 years or so.
Right.
How is it doing?
Doing pretty well. Your last guest, Mark Romig, was great. He's optimist. I'm an optimist also. And the city looks good. Like any other big city, there's some urban decay. There are problems. But on the other hand, you had mentioned New Orleans being a unique city. It is. It's like you're going to Europe, except it's a lot closer. And we use dollars. Surprise, surprise. So there's a lot to do here. And, again, it's weather dependent. But the economy's picking up. Tourism's back post-COVID. We've got Mardi Gras to look forward to, which is once a year. I'm glad it's somewhat contained. It's not all year long. But it changes. Everything changes here seasonally, and there's always a lot to do. So I love it here. I'm very happy.
Okay, let's talk markets, because we are in the midst of a rally.
Are you happy about markets, too?
Yes, I am.
That's the question. I mean, let's just look at the last 5 days, up 4.5% on the S&P 500 in the last 5 days. That brings our year-to-date score up to 14.2%. On the S&P 500, we're kind of back to levels that we last saw in September at this point, which is funny considering a week ago we're at lows last seen since May. So a big rally very quickly. Sustainable?
I think so. And what's interesting is it's sort of a tale of two cities. You mentioned the S&P 500. The S&P 500 is composed, of course, of 500 stocks, but there's 7 stocks, the Magnificent 7, if you want to call them that. They're up about 50% so far this year. The other 493 up about 2%. So the market goes through a rotational sequence, and that's what's happening right now. All of a sudden, the unloved stocks, the unwashed, they've had their day in the sun for the last week. And I think at the end of the day, it's very important to remember valuation metrics. So again, you look at the S&P 500, what is the PE ratio for those 7 stocks versus the other 493? Wide disparity. Those 7 stocks, 28 times next year's earning, 16 times for the 493 stocks. So at some point, there's a rationality that comes back into the marketplace, and valuation metrics come back into play. At the end of the day, it's not a popularity contest. It's a long-term who can actually perform, where the valuation is going to be. So we're optimistic for our sector, more small, mid-cap.
I was going to say, the small cap space is where you like to play. It's been a rough ride for a while.
Yes.
I know you know well. But it was interesting. We were just talking about, with our trade czar, about a logistics index.
Yeah, Brendan Murray.
That talks about an inventory rebuild. Particularly, we're starting to see small companies go back to that inventory rebuild. So a good sign. What are you seeing in the small cap space in terms of opportunities right now? Is it time for them to kind of have their day in the sun?
I think it is. We've placed our bets. We're fairly fully invested, and we think there's a long-term, if you've got patience. And remember that unlike any gambling, this is not a one-day occurrence, a one-hour occurrence. You've got to be patient, and you've got to realize that you've got to diversify between different segments also. That's of the utmost importance. So we've diversified, but again, we're more in small, mid-cap areas. That's where the value is.
Is that a play, though, on the U.S. economy? No doubt about it?
Correct. We're more domestic-oriented. You get into different accounting rules. You get into different oversight. There's an SEC here. There are GAAP principles, and those are adhered to. Other countries, it's not the same level playing field. Insider trading rules, that's another big difference in the United States. So I think you've got a level playing field here, and that brings a lot of comfort to investors. That's why we've got so many public companies here versus the rest of the world. We dominate the world indexes.
Speaking of small caps, we do like to look at small caps as some indication of what's coming down the line for the economy.
Right.
Are the small caps that you follow sending any concerns about the way that the economy is looking?
I mentioned I'm optimistic, and I would say that most of the board...
But you also said small cap investors have to be patient.
I said both. You're right. You're right. But I think it's true that you have to be realistic about things. And board members, CEOs are going to be realistic. They're never going to paint a perfectly rosy picture that wouldn't be fair. So long term, I think there are some problems to get up. You mentioned inventory. We just got finished with most of a UAW strike, so inventory for car parts, that's a little difficult right now. Consumers listening to this show, I'm sure, have tried to order parts for their washing machine, dryer, whatever it may be. We're just getting over all that stuff from all the COVID problems.
In terms of the small cap space, where have you put some money to work recently? Specifically.
One that's interesting is Atlas. Atlas is in the Permian Basin in West Texas. They supply, of all things, sand, boring, but
it's needed.
It is needed for all the fracking.
Yeah.
And more importantly, to get sand, which is, of course, very heavy, need lots of it from place to place, they've come up with something called Dune Express. Dune Express is a huge conveyor belt that brings sand cheaply, efficiently, and without accident. If you go to West Texas, you'll see trucks all over the place. You'll see attendant accidents from that. And, of course, they want to save money. And don't forget that you've seen Chevron and Exxon make big plays in buying out companies in that area. Relatively cheap stock, has a 4% dividend. Just went public about a year and a half ago. Fantastic, well-run, a paradigm of what we want to invest in.
Do you think they're an acquisition target?
No. And one of the reasons I say that is the founder is a guy named Brigham, and he started Brigham Exploration, a couple other companies. He owns 60% of the company. He's going to run this for as a young guy.
George, got 30 seconds left
Yes.
here. You know, the energy space feels like it's a little bit of a slide backwards from the alt energy space, only because people are saying it's going to take a while for the transition. Like the reality has all of a sudden hit. What would you tell people about what's going on in terms of fossil fuels and kind of traditional fuels?
I'm going to turn it on you just slightly, if I can.
In 30 seconds.
Yes, picks and shovels, gold miners. You don't want to go try and buy the gold. You want to sell the picks and shovels. That's what Atlas does. They sell the sand. Permian Basin fracking is going to be going on for a long time. You need a lot of sand. Let's do the picks and shovels. Let's make life easy.
Interesting.
Picks and shovels and sand.
Picks and shovels and sand. That's it. All fits together.
All right, gonna leave it there. It's so nice to see you in
Great.
person. Really
Thank you.
appreciate it, and thank you for coming along. George Young, he's partner and portfolio manager at Villery & Company, joining here with us on site in New Orleans.
All right, let's get a check on Steve Rappaport. He's got the latest Bloomberg company news, joining us in our New York studio.
Good afternoon. From Bloomberg World Headquarters, I'm Steve Rappaport. Uber stock is up more than 3.5% after delivering a mixed earnings report. More on that from Bloomberg's Jeff Bellinger.
Steve, Uber says total gross bookings, including ride-hailing, food delivery, and freight, are projected to be $36.5 billion to $37.5 billion in the fourth quarter. That topped analyst estimates, but third-quarter revenue still fell short of expectations. Uber attributed the slowing growth rate to accounting changes. The company still dominates the U.S. ride-hailing market with a 74% share. Rival Lyft, which reports earnings tomorrow, has the other 26%, according to data from Bloomberg. Steve?
Thanks, Jeff. WeWork is scrambling to dump dozens of leases after the workspace sharing company filed for bankruptcy protection. Despite being unable to pay the rent, Bloomberg News bankruptcy reporter Amelia Pollard says landlords have no choice but to let WeWork out early.
That's one of the big protections and benefits of bankruptcy in this country is that, it gives the debtor, the company that files for bankruptcy, sweeping leverage, really, in negotiating that sorts of things. So it includes contracts, too. But leases are the big thing for retail companies. And oftentimes when retail companies are in distress or struggling, one of the main things that needs to go is to cut down that footprint. I mean, they're just hemorrhaging cash through rent, especially in underperforming locations. So that's what we're seeing now.
Bloomberg's Amelia Pollard reporting. J.M. Smucker has extended its offer to acquire Hostess brands. Hostess has less than 10 minutes, though, to accept that deal unless the deadline gets extended further. J.M. Smucker is sweetening that deal. Hostess has 10 minutes. I'm Steve Rappaport. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Masser, Tim Stenevec. We're going to get back to the Wells Fargo Summit in just a moment. But first up, a check on world and national news headlines. A lot going on. Off to Michael Barr we go in our Bloomberg newsroom.
Thank you very much, Carol and Tim. Ohio voters today are deciding whether to pass a constitutional amendment guaranteeing an individual right to abortion and other forms of reproductive health care. Meanwhile, Virginia could act as a bellwether as all of the state House and Senate seats are up for grabs. Virginia Governor Glenn Youngkin and his super PAC have been campaigning hard to hold a Republican majority in the House and flip control of the state Senate to the GOP. A gun ban in domestic violence cases is getting support at the Supreme Court. The panel is hearing its first case about guns since last year's decision that called into question numerous gun control laws. More from Bloomberg's Steve Potisk.
The justices today are taking up a challenge to the federal law that prohibits people from having guns if they are under a court order to stay away from their spouse, partner, or other family members. The federal appeals court in New Orleans struck down the law following the Supreme Court's Bruin decision in June 2022. The court's decision in the new case could have widespread ripple effects, including in the high-profile prosecution of Hunter Biden. Steve Potisk, Bloomberg Radio.
The Union for Striking Hollywood Actors rejected what the studios called their last, best, and final offer. Netflix CEO Ted Sarandos spoke with Reuters about the talks.
They're ongoing. We're at the table all day, every day, and we are trying to get this strike resolved and get the town back to work.
SAG-AFTRA says its negotiating committee is determined to secure the best deal. Tens of thousands of culinary workers and bartenders in Las Vegas are threatening to go on strike just as the city prepares to host a Formula One Grand Prix. Union members are targeting MGM Resorts, Caesars Entertainment, and Wynn Resorts, including this woman.
We've worked hard for these companies. We deserve to not be left behind. We deserve to not have our hours cut. We deserve to not have to work 2 and 3 stations.
Hundreds of thousands of tourists to Vegas may be forced to go without food and beverages at hotels and casinos. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Carol, Tim.
Thank you so much for that update, Michael Barr. I really do appreciate it. We are live from Wells Fargo's inaugural Black Business Leaders Summit in New Orleans. Tim Stenevec and Carol Masser. We're streaming on YouTube. We're on Bloomberg Originals. We're, of course, on Bloomberg Radio as well.
We are indeed. Hey, we did want to bring to everybody a story that is among the most read on the Bloomberg. Started getting, I think, some details. Was it late yesterday?
Late yesterday. Not too unexpected.
No, and I feel like over the last couple of weeks, things have been unfolding. But WeWork did indeed file for bankruptcy. So a tumultuous period for this company. It was once cover of Business Week, high-flying startup, really just multifaceted in terms of what it was looking to do with the world, but failed IPO, the COVID-19 lockdowns, a blank check merger, and then that slow to return to office trends really kind of made it difficult for WeWork to survive.
Let's talk numbers. So back in 2019, at its peak, it commanded a $49 billion valuation.
Mm-hmm.
Now it's listed $19 billion of liabilities and $15 billion of assets in its bankruptcy petition in New Jersey on Monday. It's a Chapter 11 filing, and it allows WeWork to continue operating while working out creditor repayment terms. We should note, Carol, WeWork, it was once the biggest private office tenant in Manhattan. In bankruptcy, it has moved to nix dozens of pricey leases in New York immediately.
Yeah, 777 locations, 39 countries. That was as of June 30th. So they were quite big, but it was an enterprise that was unprofitable and really not sustainable. There's that story on the terminal that's among the most read. There's another one, though, that also talks about what it means for Masayoshi Son, because he lost a lot of money. We're talking about $11.5 billion, and really, a legendary, iconic investor, especially when it comes to innovation and startups, but a little bit of a difficulty, to say the least, when it comes to
it adds to SoftBank's challenges.
Yeah, exactly. All right, listen, don't go anywhere. We've got more from New Orleans. We're going to continue the conversation, smart conversations among different parties, including the team at Wells Fargo, about diversity, inclusion when it comes to the financial community. So all of that's to come. Don't go anywhere. This is Bloomberg.
Markets Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 12 noon on Wall Street. We do check markets all day long at Bloomberg. Another up day for the Dow, the S&P, and NASDAQ. We have got a rally in big tech, putting stocks on pace for their longest winning run in 2 years. Traders are shrugging off the latest attempts from Federal Reserve speakers to tone down Wall Street's dovish bid. Here's where we stand. S&P very close to session highs, up 12 points now. That is a gain of 0.3%. Dow Industrials up 60, an advance right now of 0.2%. The Nasdaq Composite Index up 118, higher by about 0.8%. Russell 2000 Index of small cap shares trading lower, down now by 0.2%. 10-year yield 4.58% with a 2-year. 4.92%. Spot gold down $14 the ounce, down 0.7%. The precious metal now at $19.64. And West Texas Intermediate crude is down 3.5% with a 78 handle right now, 78.02 on West Texas Intermediate crude. So it is an up day on Wall Street. Again, the 10-year yielding 4.58%. What about the outlook for the 10-year? Ed Yardeni is the president and founder at Yardeni Research, and he was a guest at the Wells Fargo 2023 Black Business Leaders Summit right here on Bloomberg Radio.
I would think that at this point we're going to have a very wide range. I think 5% might mark the top of the range for a while, and I think 4%, 4.25% might mark the bottom of the range. I think between now and year end, it's going to be even tighter than that. It'll probably be 5 to 4.5%. I think we'll trade in that kind of range.
And again, the 10-year right now, 4.58%. Uber out with a mixed picture of its business, showing a second consecutive profitable quarter and an increase in demand for rides and delivery, but also slowing revenue growth. Uber shares, they're driving higher right now, up 2.8%. Crosstown rival based in San Francisco, Lyft, up by 1.6%. I'm Charlie Pellet. That is a Bloomberg Business.
Live from Wells Fargo's inaugural Black Business Summit, Leaders Summit specifically in New Orleans. We are on Bloomberg Radio, on YouTube, and of course Bloomberg Originals. Coming up this hour, just seated to our right, my right, 2 members of the corporate and investment banking team at Wells Fargo. We're going to get to them in just a moment. John Weiss, he's the CEO. Danielle Squires, head of diverse segments for the group. We're going to talk about the environment, the role of diversity, and much more.
Yeah, we're also going to be checking in with Nicole Elam, president and CEO of the National Bankers Association. This is the trade association that represents MDIs. These are minority depository institutions. Looking forward to that conversation as well.
Todd McDonald, right, of Liberty Bank, is going to be along with that as well with Nicole. And then Kelly Weiner-Smith, she's the co-author of a new book. It's called City on Mars. Can we settle space? Should we settle space? And have we really thought this through? She wrote this book with her husband, but I feel like it's a provocative thing. Elon Musk might have something to say about that. It's cold up there. It's a little bit cold. It is not cold, though, in New Orleans. So let's get to our guest. As we mentioned, 2 members of the investment banking and corporate banking teams at Wells Fargo, John Weiss, CEO, and Danielle Squires, once again, head of diverse segments for the group. Thank you for inviting us here. As I said to you as you were sitting down, I feel like we've had some very meaningful conversations, and it's not just conversations, it's about metrics already being laid down and actions. John, come on in on this collaboration, this event, this inaugural event, and what it means to Wells Fargo.
Sure. Well, Carol, thank you, and Tim, thank you for being here. This is an important conference for Wells. I think it's an important conference for the folks that are here. We've gathered 150 plus very senior executives from the Black community, and it's a networking opportunity. It's also an opportunity to learn from some of the success that some of these executives have experienced, what drives them, what challenges have they had, what has motivated them. And we're still, in the early hours of it, but it's been very impactful.
John, take us behind the scenes here and sort of the generation of this event. What were the conversations that were happening over the last few years where the executive team said, okay, this is something we got to do?
Yeah. Well, it started actually, and we were talking about it a little bit earlier. It started in a conversation that I was fortunate to be part of, and a couple of colleagues, African-American colleagues, at an event that was celebrating the success of some of our own people. The topic came up, why don't we do something like this on an external basis? And of course, we'll pass the baton in a minute to Danielle, but Danielle leads this diverse segments effort for us, which is a really important effort. And the question came up, why don't we host something like a Black Business Leaders Conference? And it seemed like a great idea. That was about 18 months ago. It takes a little time to organize these things and slot things in.
Because there's nothing going on in the world.
Because there's nothing going on in the world. And,
everybody's free this week.
But, and we chose New Orleans because it's obviously a place with a tremendous amount of history to the African-American community and culture. You know, it grew from there, and it seems like the beginning of hopefully many more.
Danielle, come on in on the conversation and tell us about some of the conversations that were going on and what you guys wanted to create. So it wasn't just another conversation that 2 years from now, 5 years, we're like, oh, that was good conversations, but what did we do? We didn't do much. You want to show that there's actionable results.
Absolutely, and I think the first thing we think about is we have to have a strong connection first before we can lead to action. And so this is a conference where we aim to connect folks together. Folks who might not have been in a room together before, folks who may have been in a room together 20 years ago but need to be in a room together today. And really, the first step is to talk about it. The second step is to really do something about it. The other thing I'd say, too, is from our perspective, our whole mandate is to grow and maximize positive outcomes for our diverse clients and communities. And there's no better way to do it than how can we grant greater access to the capital markets? How can we create these connections and form lasting partnerships that take it beyond this? And so we've had great conversations. And as John said, we're in the early innings. We do this for another day tomorrow. But what we've already found is that there are more opportunities than anybody thought going in. And unlike Vegas, right? This is not what happens in Vegas stays in Vegas. What happens in New Orleans has to leave New Orleans and spread out, and that's our goal.
I feel like there's so many things I want to follow up on, but relationship. I feel like the investment banking world is so much about relationships. And I remember talking to an individual, big M&A individual, and he said, I look to put people together that like each other, get along, because that's going to be a good deal. But let's build on that. That's this idea of relationships, because I think within the financial community, whether it's the underbanked, unbanked, there's a lot of relationships that just they don't exist.
Yeah. Well, I'm glad you focused on that, because a lot of people look at banking and think of it as a transaction. And really, it isn't a transaction. It is about people. It's about the relationship. And ultimately, it's about the trust that you establish with another party. And hopefully, we're helping to build some of that trust here, not only between Wells Fargo and some of those parties, but among themselves. And I think it's absolutely critical. And to M&A, if you really want to get to the heart of it.
It was Jimmy Lee at Morgan Stanley.
JP Morgan.
No, JP Morgan, rather. Forgive me, JP Morgan.
But, well, Jimmy would have said it. The reality is you have to have a culture and a common vision for M&A to work. You know, whether any of that is spurred at this conference, we'll see. But the relationships absolutely will develop into future business opportunities for people.
So Danielle, how are you thinking about success here and how you make sure that what happens here leaves New Orleans? I mean, what are the benchmarks that you're using internally and externally for our investor audience?
Yeah, I think for some of us, we're really looking on following up from here to talk about sort of what are the collaborations and the meetings that happen, what are the new joint ventures that form, what are the building opportunities, the financing opportunities. And so because we have folks from every industry group you can think of, right? We have financial institutions, industrials, consumer and retail, across the gamut. We have business leaders and nonprofits.
Are these people from everywhere in the country?
Everywhere in the country, right? We brought a really intentional group together to say, hey, we're in this together, and how do we leave this together? And so following up on that with the ideas that come out of it, we have a whole group that's really just focused on when we leave, follow up on every single individual.
What I do find interesting is that some of the folks who are here could be ostensibly viewed as competitors to Wells Fargo. How are you thinking about that?
You know what? In the grand scheme of life, there's no competitors to the mission of creating greater and positive impact for our diverse and underserved communities. And quite frankly, we're all in this together. And we will do a lot. But it's going to take more than one bank, more than one institution. And I think we all need to rally around that. We all need to push each other forward. I also like to say, look, at the end of the day, it's also not a zero-sum game. We can all win, and we can all win together. And I think that's really what we're focusing on. So yes, there might be a technical competitor or two, but when we walk in that room, we're all collaborative partners. And when we leave the room, we all have projects to work on together.
Well, are you guys already thinking about how you leverage this model above and beyond?
Oh, absolutely. Well, we're leveraging it, as Danielle said, across our consumer business, across our wealth business, and our commercial business, banking business, and our corporate banking business. These, like any relationship, things do take time to develop, but we're seeing a lot of momentum coming out of it, and some business that we no doubt would not have contracted has already come. So, yeah, I see a lot of opportunity coming.
Like in the last 24 hours?
No. Like I said, some things take a little more time.
We're talking relationships here,
Yeah,
so.
no. You're developing these relationships, but you're also starting to, get inside people's minds as to what their strategies are and what they want to achieve with their companies. And those may be conversations that we would not have had access to were it not for this diverse segments effort. So,
how do you guys think about, too, the diversity internally at Wells Fargo so that you make sure as you're trying to broaden the impact on the community at large to be more inclusive, that to make sure that you've got the right parties and a diverse group of parties internally to help facilitate
it's
all of this?
symbiotic, isn't it? So, I mean, we're trying to make sure that our client base reflects the opportunity in America and gives access to that broader client base. We're also making sure that we look increasingly like the rest of America, and it's that interaction and diversity of thought and diversity of interaction that's going to lead that sparks business.
Is that pipeline to the C-suite getting more diverse?
I'd say yes, but it's a and I don't mean to say anybody should be patient about this. I think we should all be very impatient about it. But you're hiring the best talent, and you want to make sure that you're reaching the broadest possible talent community as you do that hiring. And hopefully, if you do that well, and if you develop well from within, you're improving your representation across the board.
I want to ask both of you, like, how the conversation has evolved. And we talked a lot during the pandemic, certainly coming off of the pandemic and the inequities that were revealed, George Floyd. We had some really smart conversations, and I feel like some very deep. And I feel like with colleagues, too, where all of a sudden we started to look at the world in a different way. How has the conversation evolved that got you guys to this point here, whether it was looking internally at what your own firm was doing? How is it? And I think about who's listening right now or watching right now, what they need to be asking themselves. Danielle, if you want to start.
So, Carol, I love what you said, and the operative word here is conversation. What we'd found for a long time is we weren't actually having conversations, and so
I found that from our colleagues who said we just didn't talk.
No, and we almost sat blissfully in not talking, almost unaware of the fact that we weren't talking. Some of it wasn't malicious, but it was just sort of we went on about our everyday lives and made assumptions of maybe ourselves and each other. And I think what we've been fortunate to do at Wells Fargo, and I'm sure across many other industries and spaces, is continue that conversation and continue the dialogue and say the hard things and sit with uncomfortable spots. And I think because out of that grows opportunity, out of that grows honesty. And a lot of what we've done and we've done over the last couple of years and we continue to do, and is really what the genesis of this is today, is create the moments of opportunity, right? Spark can't happen unless you put two things together to create that flint, right? Create that moment. And so that's what we continue to do, is to just dialogue and have conference and talk through the hard things. For us, that's what's moved us forward.
The only thing I would add is I think you have to be deliberate. You have to be deliberate in how you develop people. You have to be deliberate in the client base that you're chasing.
Can't just be accidental.
Accidents, don't lead to strategies.
Is that what's different, John? I feel like that there is a lot more things that are deliberate. I like that choice of words.
I think that's, well, in everything we do, we need to be deliberate, right? So why would we assume that developing talent is any different? In fact, it's got to be at the core of it all.
We'd be remiss if we didn't ask about business within your segments. So, John, I want to start with you and just thinking about corporate and investment banking, the environment right now. How would you describe the environment right now?
You know, it feels like it's recovering a little bit. It's been a couple of relatively tough years for the M&A business and some of the capital market businesses as well. We're actually having a pretty good year within Wells, at least through 9/30. I don't want to forecast anything. Part of that is some secular growth that we feel like we're experiencing. We've been hiring some additional talent. I feel like the engines are starting to fire a little bit as a result of sort of renewed calling that came after COVID. COVID was a very disruptive period in business generally.
Mm-hmm.
And if you're the challenger, which in many cases Wells is in the corporate investment bank, it's important to be out in front of clients in person. It's really hard to win business away from someone over Zoom. So our team's been out trying to generate business, and I think we've started to see some signs of success.
Danielle, your thoughts?
So I would add to that, so being a part of the corporate and investment bank, everything that John says also applies to us, and we consider ourselves almost like a mini investment bank within the corporate bank, focused on diverse clients and communities. And I would say the key word is our intentionality has seen that business grow. And the ability to cover clients, not just for what they do, but positively for who they are, has allowed us to have those greater inroads and work for our clients in different ways than before, and it's been fantastic.
All right, we're going to leave it on that note. Thank you both, and thank you for including us here in these conversations. John Weiss, of course, CEO of Corporate and Investment Banking at Wells Fargo, at Danielle Squires, Head of Diverse Segments for Corporate and Investment Banking at Wells Fargo.
Well, we are broadcasting live from Wells Fargo's inaugural Black Business Leaders Summit here in New Orleans, where they've gathered prominent leaders of the Black business community to engage in meaningful conversations.
We're going to continue the conversations going forward. And, of course, just the themes, I feel like, I like this idea of deliberate, of it's not just conversations anymore. It's actually laying out some key metrics to hit, and it's also about really actionable items to move on and giving kind of deadlines or timeframes, if you will. I feel like that's been certainly a narrative we've been talking about.
Yeah, it really has. And in just a few minutes, we're going to check in with Nicole Elam, President and CEO of the National Bankers Association. Also, Todd McDonald, President of Liberty Bank, is going to join us as well.
All right, we're going to talk a little bit about living on Mars or whether or not it's even viable.
True.
And then a little bit later on, Elon Musk is going to talk about he wants someone for his next venture. It's not going up into space. It's something very different. All right, you are listening and watching Bloomberg Business Week. I'm Carol Master along with Tim Stanovic. We are live in New Orleans, and this is Bloomberg.
Let's check in with Steve Rappaport for Bloomberg Company News. Hey, Steve.
Good afternoon. WeWork wants out from dozens of leases now that the company is bankrupt. More from Bloomberg's Gina Cervetti.
The former high-flying startup filed for bankruptcy, listing almost $19 billion of debts. The New York-based co-working company said it had struck a restructuring agreement with creditors and would streamline its rental portfolio of office space. At one time, it was the biggest office tenant in Manhattan.
Thanks, Gina. Under bankruptcy laws, landlords are required to let WeWork out of their leases early. If you're just joining us, or if you might have heard a moment ago, Elon Musk's brain implant company Neuralink gets the okay to seek a volunteer for its first clinical trial. Bloomberg's Lisa Mateo reports.
They're looking for someone, basically an adult under the age of 40 whose four limbs are paralyzed, who's willing to have a chunk of their skull removed by a surgeon so a large robot can insert a series of electrodes, super thin wires into the brain. Now, when that robot finishes that missing piece of skull, it's going to have been replaced with a computer the size of a quarter, so very small. It's going to read and analyze a person's brain activity. They're looking to prove if it can convert a person's thoughts into a range of commands that a computer can understand.
Bloomberg's Lisa Mateo reporting Musk initially hoped clinical trials would be ready to go by the year 2020. No ketchup? No problem. Heinz is releasing a pickle-flavored ketchup for your hot dogs and burgers. The company says 73% of Americans love the taste of pickles, so it jumped on board. You'll have to wait until next year, though, to try it. Right now, shares of Kraft Heinz are down less than 0.5%. And those are the company stories we're following this hour. I'm Steve Rappaport. This is...
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We begin with a developing story. Our Mark Gurman is reporting that in a rare move, Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. So again, we've got Apple delaying work on the iPhone and Mac software overhauls to fix bugs. As for Apple shares, they are trading higher. Apple holding on to a gain of 1.1%. We got ourselves a tech rally underway with the NASDAQ Composite Index up 0.7%, building on yesterday's and last week's gains. NASDAQ up today by 100 points. S&P up 7, up 0.2%. The Dow up 39, up 0.1%. 10-year yield 4.58%. Spot gold now at $19.63 the ounce, down 0.7. And West Texas Intermediate crude down 3.8%, 77.77 a barrel on WTI. Uber Technologies out with a mixed picture of its business, showing a second quarter consecutive profitable quarter and an increase in demand for rides and delivery, but also slowing revenue growth. CEO Dara Khosrowshahi's just wrapped up an interview with Bloomberg about the quarter.
We had another record quarter, and that the business is accelerating and actually surprised us on the top line. Our gross bookings came in over $35 billion, up 20% on a constant currency basis.
And Uber shares are up now by 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, more than half a century after Neil Armstrong landed on the moon, another space race is definitely heating up. We talk about it all the time. This time it's about the promising new frontier for us Earthlings.
That's you and me.
Mars?
Is it?
I don't know.
Okay, so NASA's got a rover up there. Elon Musk is trying to get SpaceX's Starship rocket up to snuff with the ultimate goal of getting people to Mars. But Carol, the question remains, is it actually a good idea for us even to be thinking about going to Mars and colonizing space?
I don't know. Earth is, having a rough time, so we might need another place to live. Anyway, this is the question of our next guest, who set out to answer it in her new book. Kelly Wiener-Smith is the co-author of City on Mars, Can We Settle Space? Should We Settle Space? And have we really thought this through? She wrote this book with her husband, Zach, and she joins us on Zoom from Charlottesville, Virginia. Kelly, it's a subject we love to talk about. Elon Musk loves to talk about it. So many people. I'm the daughter of a rocket scientist. I love talking about this stuff. Tell us about this book, what you set out to do with your husband, Zach.
Well, so after writing our first book together, we thought that space settlements might be a near-term possibility, something that might happen in our lifetimes. And so we set out to write the guide for what the next couple decades are going to be like as we become a multiplanetary species. And after 4 years of research, we essentially determined that we are not ready to take this on yet. We don't know enough about a lot of different topics. I'm happy to get into them. And that actually, if we rush into it, there could be a lot of problems.
Well, okay, so talk to me about the idea, like the time frames that you're thinking of here, because I mean, should we actually be thinking about colonizing Mars within our lifetime?
And can we just say, for those of you watching on streaming and YouTube, we're kind of loving your background. Is that Mars in the background? I'm not quite sure.
No, that's
Earth.
No,
that's Earth. Those are the lights from Earth. So sorry, your question was, should we? In our lifetimes. I think that if it happens in our lifetimes. No, it's okay. If it happens in our lifetimes, I think that might be a problem. So, for example, we don't know nearly enough about how space impacts the human body. It turns out data from the International Space Station don't tell us what we need to know about humans living on Mars. So I think if we sent them there could be a lot of ethical problems, especially if they started making families and, exposing children to these environments that we don't understand very well sounds like a problem. And as you mentioned, there might be a race with China starting.
Okay, so let's think about some of the challenges that we're not talking about just like, logistical things like actually having families. We're talking about things that are pretty serious. Like, okay, once you get there, how do you get back?
Yeah, we're talking about poop, food, and closing the loop.
Yeah, you said it, Carol. That's what I really wanted to get to. Okay, so just go for it. Carol's fault.
Sorry.
So closed loop ecosystems. Basically, if you're going to be living on Mars, it's going to be really expensive to get resources to you from Earth. And for a long time, it's going to be really hard to extract resources from Mars. And Mars is a 2-year trip there and back. It's 6 months to get there, and then you're stuck there for a while until Earth sort of comes back around again, and then it's 6 months to get home. So you need to have a system that does not break for at least 2 years and ideally recycles things. And we just do not have that technology figured out yet. There was Biosphere 2, which is sort of well known as being a bit of a catastrophe. And then right now we've got facilities in China, for example, that try to run these experiments. And in a recent round, they had to swap out 2 big guys for 2 smaller females because they weren't making enough oxygen. That's where we are right now. If that happened on Mars, that would be death instead of just swapping out crew members.
Do you think we're actually, is Elon Musk the guy who's going to do this? After doing all this research, is he the one who's going to be able to do this?
I hope not. So I have to admit, I am very impressed with what Elon Musk has done with SpaceX and what he's done with Tesla. And I am coming to you right now from a Starlink connection. And so I love his projects. Cool. I don't think that he's the best person to lead us into becoming a multiplanetary species, but I'm not that worried about it because I think his timelines are way off. I think he's famously said that, once the rockets have been figured out, the rest is going to be easy. But I think the whole point of our book is that rockets are one hard part, but there's a lot of other hard parts, from figuring out, the biology to building the habitats that are self-sustaining to figure out the geopolitical hurdles that stand in our way. There's a lot more than just rockets. And so I don't think Musk is going to be leading us out there in our lifetimes.
Hey, Kelly, you have fun with this in the book, you and your husband. I mean, you got a PhD in ecology. You are a faculty member in the biosciences department at Rice Universities. So you've got a serious side, but you have fun with this. Why was it important to lay this out? Is it because people are focusing too much time, money, and effort on this when maybe it doesn't quite make sense yet? Or may never?
Well, so I mean, we started the book thinking that it maybe did make sense, but the more research we did, the more we discovered that there's a lot of topics that aren't getting, for enough airtime and enough of people's attention. And the topics, maybe don't sound as exciting as rockets and rocket science, and they're just sort of like boring long-term work that needs to be done to try to understand things like how partial gravity impacts bone development across, the course of a lifetime. And we decided that we wanted to be funny in this book because we wanted to get really deep into the details. So, for example, there's 5 chapters on international law as it pertains to space. And when we pitched that to our editor, she's like, I don't know that the general public is dying for 5 chapters on international law, so you better make it funny. And so we tried to do that.
Okay, so when you're thinking about what life actually looks like on other planets, is it something that humans should actually pursue if the time frame actually gives us enough time? Or should we focus on, I don't know, making the most of the Earth that we've got?
Well, so I think that space is not going to be a near-term solution for any of the problems that we have here on Earth. So, for example, folks like Bezos argue that we should move all of our heavy industry to space so that we're not polluting Earth anymore. And maybe we can, zone Earth as light residential. We'll move a bunch of people up to space too. I think the numbers just don't work out for stuff like that. So, if you think about moving humans off the planet to take care of population growth issues, you have to move 220,000 people to space every day. I don't know where you're going to get those volunteers, and we don't even know how to house them. So I think any problem that we're likely to... He's looking for volunteers, and I think he'll get a lot. I don't know if he's going to get that many. And again, we don't have anywhere to put them because we don't know how to keep that many people alive in space. But if you're interested in a backup for humanity, I think a long-term plan B could be good. So, if you start the settlement on Mars now, many generations from now, it might be self-sustaining. And if you like humans, which I do, then it might be good to have a backup in case something happens on Earth, but it's not going to save us anytime soon.
Kelly, one thing I would argue, though, is that many would say that the race to put a man on the moon led to lots of innovation.
Tang.
Velcro. I know you're going to go there. No, but some really, really important developments, right? It really kind of brought nations together, scientists together on a single mission, but it led to so much, many offshoots off of that. Wouldn't similarly the pursuit of Mars maybe lead to that as well? And it's a good kind of thing to focus on and have a goal of, as difficult as it may be.
Yeah, so I think that's an interesting point. But so, you talked about countries being brought together by the Apollo program, but the Apollo program was really fueled by a rift between the Soviet Union and the United States. JFK was sort of famously not even actually that interested in space, but it was a very clear thing that we could do to beat the Soviets. And, it's a military prestige thing. The rockets that you're sending those humans to space in could also be delivering, missiles. And so I think a lot of times going to space is not necessarily about bringing people together and the new technologies. Historically, it has also been about trying to show up our enemies. And that might be what drives us to Mars or to the moon again. Competition with China is heating up at the moment. And I think we should, yes, it might drive innovation. And that's exciting, but we need to weigh that against, concerns with how this conflict might, spark problems down on Earth. But yes, you might get some new technologies, but there's other things you could invest in to get these new technologies too.
Fair enough. Kelly, thank you so much. Really fun and interesting. Kelly Wiener-Smith, co-author of City on Mars, Can We Settle Space? Should we settle space? And have we really thought this through? As we said, she wrote this with her husband, Zach, and she was joining us from Charlottesville, Virginia.
And today's the day. The book comes out today.
It's very cool.
Yeah, be sure to check it out. Really appreciate you joining us, Kelly. Let's get a check of the latest business news. We got Charlie Pellet standing by in New York. Hey, Charlie.
Well, hello there, Tim and Carol. We have got the Dow, the S&P, NASDAQ continuing to advance. Stocks powering past a wall of worry to extend a rally. The Dow, the S&P, NASDAQ all moving higher. Stocks on pace for their longest winning run in 2 years. Here's where we stand with the S&P up 5 now at 43.72. That is a gain of 0.1%. The Dow up 21 points now, up by about 0.1%. NASDAQ up 99 for the NASDAQ Composite Index. That is an advance right now of just about 0.7%. 10-year yield 4.59% with a 2-year that's yielding 4.94%. Gold down $15 the ounce to $19.62. Drop there of 0.8%. Bitcoin down 0.7%. 34,781 right now on Bitcoin. Crude, major story today. West Texas Intermediate selling off with a 77 handle now on WTI. 77.76 for a barrel of West Texas Intermediate crude. Number of other stories today. We do have a story out of Washington. Officials will be seeking to limit some access to federal home loan banks after multiple failing lenders turned to the $1.3 trillion system in desperate bids to survive March's banking crisis. And repeating an earlier headline in a rare move, Apple hitting pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Charlie Pellet back at Bloomberg headquarters in New York City. We are broadcasting live from Wells Fargo's inaugural Black Business Leaders Summit. We are in New Orleans, and we are talking with prominent leaders of the community, the Black business community, and talking about what they are doing, how we can do it better, meaningful conversations, and actionable items. I really feel like that's a big takeaway for me.
Yeah, we've got a couple of those leaders with us right now. Nicole Elam is president and CEO of the National Bankers Association. This is the trade association that represents MDIs, also known as minority depository institutions. They're defined as any depository institutions like banks or credit unions that are owned or operated by African Americans, Asian Americans, Hispanic Americans, or Native Americans. And one of those institutions, Carol, is Liberty Bank and Trust.
Right. They were chartered in New Orleans back in 1972. They have locations in Mississippi, Kansas City, Michigan, Illinois, Alabama, Kentucky, Tennessee, and more. They have grown. They are one of the largest Black-owned banks in the United States. So we are pleased to have with us as well Todd McDonald, president of Liberty Bank. Todd and Nicole, welcome. And we should say thank you for having us as part of this conversation. And, we talk about, things have been talked about for a long time. And it does sound like we're hearing about actions finally being taken. Talk to us, though, about the MDIs in particular. We talk about underserved, unserved banking community. The role of MDIs, how important they are.
So minority banks have been around for over a century, serving communities that have been underserved by mainstream financial institutions. The unfortunate story is that they were born out of racism because Black, brown, and immigrant communities couldn't go to mainstream financial institutions for their banking services. But today, they're just as important. They're serving communities that are 77% minority, that are 2 times more likely to be denied for a small business loan, even if they have the same credit profile as their white counterparts, and communities that are 2 to 3 times is more likely to be unbanked and underbanked. So they are still just as important today, data shows, as they were over a century ago when they first started.
Todd, does that sound like the segments that your bank has a wide reach now, especially, in the last few years as you've grown and acquired other banks?
Yes.
But does that sound like the communities you serve?
Absolutely. Absolutely. In terms of the communities that we serve, typically they have lower credit scores. They don't have as much net worth or wealth to come to a bank with. And so over 50 years, Liberty Bank has been very successful in lending to those communities that are underserved and overlooked. And I think the strong part about MDIs is that we've been doing this for a very long time, and we know what we're doing, and typically our delinquency rates are within our peer group. So it shows that we have a tremendous understanding of underwriting within our communities. And so the more support that we have, the more impact we can pass on.
The perception is, right, that that's not the case. If you go back to traditional banking, right, or many of the bigger banks, like there's that perception that, okay, that person is not going to be a reliable customer. They're either going to have trouble maintaining a loan or whatever. But it's interesting to hear those statistics. Why aren't they more well known?
Well, we have limited marketing budgets, so we can start there. And we have not done a really good job at telling our stories, just because we're limited to what platforms we are part of. Thank you all for having us on this show, because obviously this is going to help us hopefully get some more supporters. But in terms of our bank performance, it's there. And there are about 150 MDIs amongst the roughly 4,000 plus banks across the country. So we're there, and we're here to stay, and we're hopefully here to grow.
Nicole,
go ahead.
Yeah,
You
so
want to jump
I
in?
would also say that we need to start redefining what we think of as risk. Oftentimes, Black and brown borrowers are considered riskier, and that's not the case. That's not what data shows. When you look at the data, what allows us to say yes when others say no is because we're looking at data points outside of credit scores. We're looking at the fact that you're consistent with your rent payments, your utility payments.
Stop
That
right
shows
there for a
that you're
second.
consistent.
Rent is very important because
Absolutely.
there's not a lot of necessarily home ownership because of
because of history of redlining and all kind of things.
So rent can become a really important metric.
But it's not when you're looking at underwriting at scale. That typically happens at larger institutions. They're underwriting at scale. But what we are great at is relationship banking. Because I know you, I'm looking at other factors, other data points. I understand that there's a history of redlining in this community. So you may not own a home, but guess what?
Both to answer this next question. Nicole, I want to start with you. This has been a tough year for regional banks, given the regional banking crisis we experienced in the early part of this year. What have you heard from your members? How tough has it been on your members? And Todd, just talk to us a little bit, about the health of your bank in the wake of, rates going up.
So I will talk about the last 3 years. In this post-pandemic, post-George Floyd environment, you've seen explosive growth of minority banks. They've grown by 38% in asset size, and Black banks have experienced the most growth, growing by 62% in asset size. So a lot of growth that is happening, unprecedented growth. So obviously when the bank failures came, there was a concern about deposit flight. There was some deposit flight. I would be lying if I said it didn't exist. It did happen, but it has since stabilized. And so I think you had this strong context of what was happening, of the explosive growth of people talking about and investing in minority banks, billions of dollars from the federal government. Wells Fargo invested $50 million into 13 Black banks. And so there's been a lot of growth, and I think that helped set the environment of when that crisis happened, they were well positioned.
And we were one of the recipients of the investment from Wells Fargo, and they've been a strong partner with us. And so while we have had a small number of deposits to run off, a lot of our customers are mission aligned with us. They understand what we do, how we do it, and when they are supporting that, it only allows us to do much more bigger things in our country. In terms of market rates, interest rates, we are not the big gorillas that are offering the top tier rates. We have about a 1.5% to 2% below sort of that ceiling, and a lot of our clients are very pleased with that.
How do you do that?
Well, one, going back to relationships,
Okay.
Making sure that supporters of us know exactly how we're deploying funds and the impact that we have on the communities. And so when we show our scorecards, a lot of people are impressed.
Yeah. Are you showing, though, any signs of stress in this environment? I mean, part of the reason I'm asking is I feel like we're in this environment from day to day. The sentiment can change depending on the data statistics.
It's high interest rate environment. The borrowing costs are high for
So how would you? Let me start with you first, Todd. Like, what? Any signs of stress among your depositors or your consumers, your clientele?
Not that we see right now on the deposit side. On the credit card side, we are starting to see a tick up. But typically...
Defaults are just higher balances or?
Both.
Okay.
Both.
Late payments?
Yes.
Okay.
But not to the point where it's causing any concern. Typically, African-American communities and Black and Brown communities, we have a lag that takes place when recessions take place or when downturns take place. It doesn't necessarily hit our communities dead on. There might be a 1 to 3 year lag until we start to see the real effects of that. And then after that time passes, sometimes we gain support or we have another turn in the economy that helps us to offset, a truly bad delinquency rate.
Nicole, how would you describe it from your members?
Yeah, I would certainly say the same thing. I think the good news is that we live in a society that is extremely more values driven. When you think about the largest share of the U.S. population, it's millennials, and they are more values driven than any other segment of the population. So the fact that you have people who are here to stay, folks that my grandparents banked with these banks, they've got long-standing relationships, that's phenomenal. But then when you look at the other side, you can't say that the interest rates aren't impacting communities. The good news is where
so some stress.
Yeah, there is some stress, right? Borrowing costs are high. Credit cards, people typically rely on credit cards when the cost of borrowing gets high. But we've been here, and we're going to continue to stay by our communities, and we're not concerned.
Todd, you've been very acquisitive over the last few years in terms of buying other banks in other states. How do you keep customers loyal if you're buying the bank, changing the bank's name?
Sure. So in terms of the loyalty that comes with a lot of the institutions that we purchase, it's there. Just like Nicole mentioned, their grandparents banked at that bank. So let's just call it Tuskegee Bank out of Tuskegee, Alabama. Lots of history there.
Yeah.
And when you look at the MDI space, most of the banks were founded by leaders in those communities for decades. And so when you have that connectivity, it tends to stick.
Cool.
MDIs. If you could do change one thing, Nicole, to just help that community, what would it be?
Partnerships. I think you get further faster together, and right now technology is completely changing the landscape, but minority banks are small banks. They don't have what they need in order to compete in this technology game. So partnerships would be the one thing.
With big guys.
With the big guys. With corporate America, government, anybody and everybody, partnerships.
Todd, your thoughts on that?
So Wells Fargo has this really creative money market product called the Empower Share Class. And that is truly beneficial to MDIs in our space. So we could take on billions of dollars under this platform, and it does not require any capital from the MDI. But the fees and the services through Empower Share Class are phenomenal. We've been a part of it for several years, and Wells Fargo has been an excellent partner. So we hope to expand that for the near future and in years to come.
All right, that's a great way to end. Hey, listen, guys, thank you so much. So appreciate it. Good luck with the next year. Nicole Elam, she's president and CEO of the National Bankers Association, and of course, with us is Todd McDonald. He is the president of Liberty Bank right here in New Orleans. This is Bloomberg.
With the thoughts you'd be thinking you could be another Lincoln if you only had a brain.
Oh, I tell you why.
Well, if I only had a brain, I don't know if I
do have a brain.
Depends on
Stop selling yourself short.
Depends on the day and the hour. Cover of the new issue of Bloomberg Business Week also relates to a new podcast by our team, Elon Inc. Elon Musk is getting ready for what could be the most consequential launch of his career. It isn't rocket science, something we just talked about going on to Mars with our author, Kelly Wiener-Smith. No, it's brain surgery.
Yeah, Musk company Neuralink is seeking a volunteer for its first clinical trial. Is the cover of Bloomberg Business Week. With more, we got Bloomberg Business Week editor Joel Weber and Bloomberg Business Week features writer Ashley Vance joining us this afternoon. Joel, I want to start with you. Neuralink, we've heard a lot about it. We haven't seen it in action very much.
There's a reason for that.
What trying to do with these chips implanted? Why? What is the reason for
Well,
that?
you can't touch a human's head, until you get FDA approval, which Neuralink now has. So in the very near future, the company is going to actually start implanting devices in humans. And Ashley Vance has had an unprecedented front row as Neuralink has been developing this technology. Ashley, take us inside the company. I mean, Elon is known for doing bold things that break open whole new industries, but this is sort of a test of Elon in a whole new way now, right?
It is. This is a guy we've seen with SpaceX, with Tesla. They've accomplished incredible things, but they've had some pretty severe bumps along the way. SpaceX blew up its first 3 rockets. Tesla took about a decade to figure out how to mass produce cars. And we're talking about brain implants here. This is something that really can't go wrong on the first go round. It's Neuralink is one, as we point out in the story, of now dozens upon dozens of companies that are looking to do brain implants, spinal implants, mostly to help people in pretty dire circumstances, paralyzed, strokes, ALS, things like that. But really, this is the start of a very exciting field. Neuralink is as ambitious as ever with Elon's companies, but has a lot on the line with this first trial.
So how does Neuralink's device and approach differ from the other competitors who have a little bit of a head start? They've already had FDA approval and have been doing human implants. So what's going to distinguish the Neuralink approach?
Yeah, there's a few things. The other companies, yes, they've done amazing stuff. They're in bodies. I've been to Switzerland, seeing paralyzed people walking again with a spinal implant. The biggest difference here is it's full Elon. This implant is more powerful than the others by about 1,000 times. It's much smaller. The other devices require you to have like a separate battery pack, a separate computing system that amplifies signals that's usually implanted in someone's body. With Neuralink, they're going to cut a tiny hole out of somebody's skull, have a robot do the surgery that puts these electrodes, these electronic threads into somebody's brain, and then the computing part, the battery, the amplifier, all of that goes into that hole in the skull and then fits flush with your head, and your skin goes over. You can't even really tell you've had it. And so it's this more powerful implant. It's miniaturized, and it has the robot to try and turn this from like a one-off type laboratory experiment into something that's repeatable.
So walk us through what the timeline looks like where they are now, and what's going to hopefully transpire for what they're trying to accomplish.
Yeah, so the last time I was there was just about 6 weeks ago in Austin, where the company is moving a lot of its headquarters. And so they're already, thousands of people have sort of signed up to get this implant. And now they're going through these applications to try to find the ideal candidate. Hopefully someone it is going to be someone who's paralyzed, but is otherwise kind of young and overall healthy. And this could happen within, it sounds like it's going to be within the next couple of months. They've already identified a hospital in Arizona, which is where this is likely to take place. And so it's just right now they're just finding the exact right candidate for this first trial.
Where, Ashley, does this kind of fall on the Elon Musk spectrum of priorities right now, given that he has SpaceX, Tesla, X/Twitter, the Boring Company, Neuralink, 9 kids? I think?
XAI, don't forget XAI, which got announced over the weekend.
XAI, thank you. But where how is he? This is a guy you know well, Ashley. Where does this fall on his list of things that he wants to do, and he wants to be part of his legacy?
It's pretty high up there. He, all his companies always come with this, we're going to save humanity kind of trapping, and this fits into that. When it was first presented to the public, I mean, he went straight for the AI sci-fi. We're gonna download Spanish and Kung Fu into our brains, and this was going to be for everybody. Billions of people would get this implant. It's much clearer now that for the foreseeable future, this is to help people in sort of dire circumstances, and so he takes that mission pretty seriously. It's interesting, he is not at Neuralink on anything like a day-to-day basis. I mean, he shows up, in my experience, like once a month and gets these kind of debriefs on what's going on, and the company's essentially run by like a triumvirate of people.
So, one of the things you've been to the Neuralink facilities in Silicon Valley. Talk to us about that. They also have operations in Austin. I'm just curious about what you've seen, what you've learned, any of the conversations you've had with Elon about this.
Yeah, and you got to see Elon, basically at work with the team at Neuralink. What was that like?
I saw him with the team. I saw him with the primates. So in Fremont, even in Fremont is where most of the primate research has taken place to date. And so for the last 3 years, I kind of hung out with the same group of 17 monkeys in there. On one hand, the office is kind of standard. It has people sitting at desks and working on their robot prototypes and things like that. But then there is this animal care facility. And just to let people know, I mean, you're in there with 17 monkeys, and at any given time, 3 or 4 of them have a laptop that's been wheeled to like the front of their cage, and they're playing video games in many cases just with their mind. They're thinking what they want to do in this video game, moving a cursor onto a tile, tracing letters on the screen, and just doing that by thinking about it with the implant going to this computer. It is wild. It's sort of hard to I try to convey this in words. It's like one of those things that you experience, and it's hard to get across just how strange it is.
But you think of people, right, who don't have that ability and are paralyzed. If they could potentially have that capability going forward, that's pretty dramatic and life-changing.
Absolutely. Yeah, just to make it clear, I mean, the initial goal with this, right, is to be able to think words that then go into a text message or a WhatsApp message. So you're communicating with your loved ones. You're communicating about your wants and needs and with the outside world. And the other goal is to be able to move a cursor around a computer screen in a very fluid fashion. And as any of us can imagine, I mean, just having access to a computer unlocks so many things that you can do. And so I mean, it is like borderline miraculous type technology.
So to that end, what are the sort of the use cases that the company sees the implant being able to solve in the short term and then a longer term, and like how big of a growth pattern could they see based on the amount of interest they've had from people who have said that they're willing to get an implant?
Yeah, in the short term, Neuralink is building off like decades of research here. So people have had the ability to think a couple words at a time, to click yes or no on a screen. But with this extra horsepower, they want it to be where you're thinking words almost as fast as one of us could type on a computer today. So that's kind of the near-term goal, being able to navigate on the screen. They also have a spinal implant that they're working on that would be paired with this brain implant, and the goal there is to restore movement in limbs and also feeling in limbs, where you kind of short circuit or create a circuit really between your spine and the brain. And from there, I mean, it moves, I can talk about very futuristic stuff. It would be far off, but it's things like improving your hearing, improving your sight, and kind of, just anything that your brain controls, which is a lot.
How promising, Ashley, is this? I mean, are we going to start seeing, in your estimation, in your opinion, will we start seeing the big healthcare companies try to get their hands on this type of technology?
If you look at the traditional device makers that do things like deep brain stimulation for epilepsy and things like that, it's been a very, very slow-moving field where a device gets made, comes out of a research laboratory, and hardly gets advanced at things have totally changed, though. I mean, Neuralink, again, is one of at least 36 other companies working on products in this field. So this whole field has moved from academia to hundreds upon hundreds of millions of dollars coming in from venture capitalists. And so I try not to get people's hopes up too much because we don't really know exactly how this is going to play out, if the products are going to live up to their potential. But there's such an explosion of interest here, and in my experience of seeing people with the spinal implants, it's encouraging. I mean, this is even in the limited forms of the technology right now, it's life-changing for people who get these implants. And so for anyone who are close to the hype, it will be a dramatic next 10 or 15 years.
So, Ashley, another element that I think you do a really great job of exploring in the story is that in all the companies that Elon has, at some point he ends up kind of touching a regulator. FDA is a regulator that he hasn't had to interact with yet, but there are some commonalities, and some of the scenes in the story kind of show that. What's the experience been with Neuralink and the whole regulation side of this particular space?
Yeah, I mean, if I'm totally honest, I've been reporting the story for a long time, in part waiting for them to get FDA approval, and there were times when I thought that actually would not happen. They have this very dramatic robot doing this very dramatic surgery with a new implant. So they submitted 15,000 pages of documents to the FDA to prove out their technology. It was an arduous process. Elon was all the Elon you could expect during this. I saw some meetings where people said, look, the FDA said you can do this one surgery, but you can't do another one for a year, to which Elon replied, unacceptable. And then it obviously goes back to the team to try and address this. And Elon has this philosophy, really, that obviously you push regulators to the edge, and as we talk about in the story, like he's seeing with SpaceX and the rockets, it's kind of, you launch it and you show them the FAA that the rocket works, and then you get to launch again. And so the hope here is you put this in someone's brain, the human who can communicate. The monkeys can't tell us what this experience is like, but this human will be able to. And Elon's hope is the human says it's revolutionary, and the FDA lets them keep going.
Well, it's pretty incredible. And I got to say, he's a controversial figure, but I would never rule him out on anything. This is the cover of the new issue. It's also part of the new podcast, Elon Inc. So, Jill, when quickly can we get that?
Podcast is launching today, and part of what we realized is that, Elon really cuts across beats, and there's a whole bigger story, which is the story of Elon as the amazing business person that he is, and obviously highly controversial. And we wanted to have a way to talk about this on a weekly basis, because Bloomberg's journalists like Ashley are the finest on this. So one of the launch episodes will be Ashley on Neuralink, and we'll have another surprise, and all of that goes live this afternoon. So subscribe wherever you listen to podcasts. Elon Inc.
We kid, it's true, but it's Elon's world, and we are largely living in it. Jill Weber and, of course, Ashley Vance. It's also the cover story of the new issue of Bloomberg Business Week. Hey, that's a wrap from New Orleans. Wells Fargo's inaugural Black Business Leaders Summit in New Orleans. We are grateful that we were a part of it. I feel like we had some very, very deep, thoughtful, important conversations. So looking forward to checking back with the team over the next year or so.
Yeah, and we'll see you all in New York tomorrow.
All right, everybody. That does it for Business Week. Bloomberg Sound On starts now.
From our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I'm June Grasso in New York with Jack Fitzpatrick in D.C., sitting in for Joe Matthew today. It's Election Day, and abortion rights are on the ballot, as well as state and local races that could provide a roadmap for 2024. We'll tell you what to look for and how it sets the stage for 2024, and the spending battle on Capitol Hill. But first, here's Charlie Pellet with what's happening in the markets. Charlie.
Well, I thank you very much, June Grasso. Happy Tuesday, happy day on Wall Street. The Dow, the S&P, NASDAQ, all advancing. A rally in big tech has put stocks on pace for their longest winning run in 2 years, 7 in a row. Investors shrugging off the latest attempts from Federal Reserve speakers to tone down Wall Street's dovish bid. Here's where we stand. S&P up 12 points right now to 43.78. That is a gain of 0.3%. Dow Jones Industrial Average up 62, higher by 0.2%. NASDAQ up 118 points, higher by 0.9%. However, this is far from a broad-based rally. The Russell 2000 index of small-cap shares down now by 0.5%. We have got the 10-year yielding 4.58%, with a 2-year right now at 4.93%. Spot gold down $13 the ounce, down 0.6% to $19.64. Crude oil, major story today, selling off. West Texas Intermediate crude down 3.7%, $77.84 a barrel. Now, what about the economic backdrop? Greg Dako is chief economist at Ernst & Young.
Well, I think we are seeing some evidence that the economy is indeed slowing. The labor market has been the key pillar of resilience in the U.S. economy. We've started to see some softening. It's not the retrenchment that we typically see ahead of a recession, but it is evidence that employers are being more cautious with their hiring decisions. They're proceeding with some strategic resizing decisions, and importantly, they're optimizing wages. They're implementing essentially wage growth compression in an effort to limit cost.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Uber, after earnings, up now by 1.7%. Rival Lyft, higher by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much, Charlie. We're 10 days away from a government shutdown, while senators are aiming for a bipartisan deal that could package aid for Israel and Ukraine with funding to keep the government operating. House Republicans seem to be exploring multiple competing options to avert a shutdown. Jack, I know you cover this minute by minute. It seems like we've been here before. Is this any different?
This is different. At least we can say that. It got pretty nasty at the end of September and led to the ouster of the speaker at the time, Kevin McCarthy. So at the very least, I think it's different because he's gone. We have a new speaker. There does seem to be some understanding among House Republicans that you need to give a new speaker a runway. So I haven't heard too much discussion about people threatening a shutdown. But yeah, they killed a lot of time, and now we're 10 days out, and they're talking about more or less an immigration reform being tacked on to this. So many different challenges they face, and I'm looking forward to getting the congressman point of view on this because they don't have very much time at all.
Before we go to the congressman, let's listen to what Mike Johnson, the House Speaker, had to say.
With regard to the funding of the government, we're working earnestly on that. We certainly want to avoid a government shutdown. It's a dangerous time around the world right now. We recognize that, and we're doing our job. So we had a very, I would call it a refreshing, constructive family conversation in our House Republican Conference meeting an hour ago. Very deliberate, positive discussions about the many options that are on the table, and we'll be revealing what our plan is in short order.
Joining us now is Congressman Steve Womack, the Republican representing the 3rd District of Arkansas. Thanks so much for joining us, Congressman.
Hey, good afternoon, June. Good to be with you and Jack both.
The Senate is discussing a legislative package I just mentioned that would avoid a shutdown and include measures for Ukraine, Israel, and the U.S.-Mexico border. Do you think that kind of wide-ranging bill can come together by next Friday, or will it have to be narrowed?
Well, you know, you would like to think that that cooler heads will prevail, and we have an interest in making sure that we don't lapse in appropriations and force a government shutdown. You know, I try to be optimistic about the whole thing. Let's be honest. There are 10 days left before that magical date of November the 17th, which in political speak is a heck of a long time because remember we don't do anything till the last minute around here, which frustrates the dickens out of me. I will tell you, when you are facing an issue, rational people try to deal with the options on the front end and settle it all before it becomes a matter of urgency, because I do believe you make some of your biggest mistakes in life when you're either heavily emotional or in a hurry or running out of time, and that's precisely where we are. But we have in the House, and I can only speak to the House, I try not to render opinions about the Senate because it's a different animal over there, but in the House we have 7 of the 12 appropriation bills that are done on an annual basis all the way through the House. We have turned down ag, so that one still hangs out there. We have transportation on the floor today. We have my bill, the financial services bill, on the floor tomorrow and Thursday, hoping to get final passage on both of those. That would put our count up to 9. And then we have 2 hanging out there that haven't even made it through the full committee yet, and that's Commerce, Justice, Science, read FBI, and also the Labor, Health, and Human Services and Education piece, and that one becomes problematic as well because of the deep cuts to labor aid. So that's precisely where we are right now, and it is obvious to me that we are looking down the barrel of a continuing resolution next weekend in order to prevent a lapse in appropriations. Now, a lot of people think, well, maybe there's time left for Congress to be able to get all this work done, match it up with the Senate, and get it signed into law. Well, that's just simply a fool's errand. That's futile. It's not going to happen. So we're going to need a CR. So what Mike Johnson talked about in conference today, the different options out there, time is not on our side. It's not our friend right now. And frankly, I think it's going to require us to be able to pass some sort of a clean continuing resolution for a date certain once we get closer to the end of next week.
And Congressman, when you say that seems like it's necessary, one, is there support broadly among House Republicans for a clean CR? And 2, what does that mean for the bigger questions about how the U.S. responds to requests for aid, especially I'm thinking of Ukraine. Israel might be more bipartisan, but what does that mean if you follow through on a clean CR?
Well, I think we have to look at this through each different lens. For example, we do have a need right now to be able to answer to the requests and the need for us to participate in some of the other larger issues that are happening abroad. But let's set that aside for a minute, because appropriators right now are singularly focused on trying to get their work finished so that we can have full year appropriations for the remainder of this fiscal year. And we're already over a month into the fiscal year, so we're talking about the better part of 11 months right now. So I think that's how we need to look at it. What can we do to take the issues about funding the U.S. government, that's discretionary spending, how can we take that off the table and solve for that issue right now? And then turn our attention back to the supplemental bill that the Biden administration wants, and because it's got mixed reviews. I mean, there are members of our caucus on the right in the House that certainly do not want to do anything in Ukraine, and of course there are those that do believe that we have a vested interest in what's going on in Eastern Europe. So, but I do think you have to separate the two, and I think we need to move straight ahead with as clean a CR as we possibly can to get the government funded beyond the 17th day of November to a date certain. Now, we can argue about whether that should be before Christmas or whether that should be mid-January or whenever. Let's just take the idea that the federal government is going to enter a partial shutdown ahead of the holiday season. Let's just get that issue off the table and then turn our attention to some of the other issues of the day.
So there's a proposal for a stopgap funding bill with 2 different deadlines, December 7th and January 19th. What is your take on that?
Look, I've tried to keep an open mind and listen to other alternatives, but at the end of the day, I'm an appropriator. The way this is supposed to work, we're supposed to do budgets early in the year, We're supposed to kick out top-line numbers. We call those 302A numbers. That's Washington speak for the top-line number for discretionary spending. Then the appropriators subdivide that money 12 ways, and we fund defense, and we fund transportation, and we fund, cancer research and all that other kind of stuff. And we carve out what we call the 302Bs, and that's the amount of money for each of the various 12 titles. That's the way this is supposed to work. It's not supposed to be done in October or November. It is supposed to be done in June and July so that when we get to October 1st, the agencies know exactly what their budget is. I would say to any competent, rational business person listening to this interview right now, do not try this at home. This is not the method that you should be using in order to fund your business, because it will meet with certain failure. But that's the way the federal government operates, and without guardrails, without any incentives, carrots, sticks, or otherwise, to be able to hold Congress accountable right now for the way it handles budgets and appropriations. Without those, I'm afraid we're condemned to this Groundhog Day scenario of continuing resolutions, omnibus packages, threats of a government shutdown, anything other than regular order.
So, Congressman, given that frustrated answer with the state of how Congress doesn't always do its job, I have to ask, when you hear about this laddered CR with two different deadlines, is the House Republican Conference or the members who bring this up grasping for straws now for some sort of creative idea, or what should we make of that proposal?
Well, I think what you're finding is they're looking for anything that might work. I am not sold on the idea of a laddered CR, because I don't think we need to get into the business of having multiple deadlines, because Congress has a hard time walking and chewing gum at the same time, meeting various deadlines for various titles. And oh, by the way, what do you put in that first omnibus package? What are the funding? What are the agencies that you're that first one? What's going to be in the second one? Is one supposed to be real easy? Is the second one you could get bogged down in trying to figure out what you do next. And I think what we need to do is just finish our work on appropriations. And like I say, we've got 7 of our 12 bills through the full House, ready to go to conference with the Senate. I had dinner last night with Susan Collins, the ranking member of the Senate Appropriations Committee, and she and I talked about the way forward over on the Senate side. I think we just need to buy some more time and then finish our work, House and Senate, get them to conference, and then come back with a conference report that can be appealing and get approval from both chambers of Congress and be signed into law. That is the way this thing was designed to work, and I don't see any other method that's going to trump that one, if you will, as a way forward.
Do the other members of your conference feel the same way about negotiating with the Senate to move forward?
I think if you're talking to appropriators, yes. If you're talking to the House Freedom Caucus, probably not so yes. And there are a lot of people caught in the middle because this, basically becomes an issue that gets played out in the general public, and people have very strong feelings about it, and they start calling their member offices, do this, don't do that. And look, at the end of the day, Congress just needs to do its job. This is the most fundamental of our duty, funding the government. It should not be this difficult. There is a process that our framers established for how we should operate. We have violated that process, and we find ourselves here at the 11th hour trying to figure out what to do when we've got so many different mixed opinions. But I do agree with what was said early in the interview. When you establish that Mike Johnson is a brand new Speaker of the House, and he does bring to the table a bit of patience with all sides. He's still on his honeymoon period, and I think the conference really wants to give Mike a victory. And so maybe handing him a victory on funding the government on the 17th of November after we just went through, 3.5 weeks of basically inaction in the House while the clock was ticking. I think there's a groundswell of support. How much so, don't know, but I think there is support for giving Mike some leeway And so whatever he does come up with in terms of a solution before the 17th of November, I think he has a reasonable chance of getting that across the finish line.
And Congressman, we only have a minute or so left, but I do want to ask specifically about your appropriations bill, the financial services bill, especially because I know pulling back old IRS funds that were included in the Inflation Reduction Act seems to be a big priority for House Republicans. I'm curious how you see it when you eventually have to compromise with the Senate on a funding package. Is the IRS rescissions a red line for Republicans, or how high a priority will that be?
To be determined, but you're right. We use some of the money from the Inflation Reduction Act as a pay for, if you will, a rescission like that, in order to be able to soften the blow on some of the cuts that we're taking. But I've said repeatedly, at the end of the day, the Senate's marked its bills to a certain level. Senator Haggerty and his counterpart in the Senate, and then we're marking ours to a certain level. They will be different. Our priorities are different. And we will have to reconcile those. But as I said yesterday in the Rules Committee, we do need to get a bill across the floor so we can go to conference. And that means that we're going to have to maybe accept some things we may not like, whether it's the FBI issue or, maybe the reproductive health issue in the District of Columbia. We got some members that are concerned about that. But at the end of the day, we need to be able to reconcile our differences, get a conference report, get this stuff signed into law, and then move on, because it won't be long before we're into the calendar year of 24 and needing to be concentrating on FY25, but we're not there yet.
Thank you so much for joining us, Congressman. We really appreciate hearing your insights on this matter. That's Congressman Steve Womack, Republican from Arkansas. Coming up next, we're going to be talking about not only about the spending, but also about today's election day. Did you remember? We're going to be talking about all the issues that are up that may provide a roadmap for what's going to happen in 2024. So stay with us. That's coming up on Bloomberg Radio right out now.
Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 set for the longest winning run in 2 years, 7 in a row. Right now, we have got the S&P 500 index up 14. That is a gain now of 0.3%. Dow Jones Industrial Average up 59 points, higher now by 0.2%. The Nasdaq Composite Index up 133 points, higher now by 1%. 10-year yield 4.57%, with a 2-year checking in at 4.91%. Gold down $11 the ounce to $19.66, drop there of just about 0.6%, while West Texas Intermediate crude down 3.6%, below $78 a barrel, $77.91 on WTI. House Republicans are preparing a temporary spending bill to avert a November 18th government shutdown and could vote on it this week. And moments ago, right here on Bloomberg Sound On, Republican Congressman Steve Womack out of Arkansas was interviewed, and he had this to say about the budget process.
I would say to any competent, rational business person listening to this interview right now, do not try this at home. This is not the method that you should be using in order to fund your business, because it will meet with certain failure.
The proposal would stagger funding for some government agencies. And in a rare move, Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. Apple shares, they're up now by 1.5%. Again, recapping, stocks are higher. S&P now up by 15. That is a gain of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
I'm June Grosso in New York with Jack Fitzpatrick in D.C., sitting in for Joe Matthew today. We're 10 days away from a government shutdown, and we just heard Republican Congressman Steve Womack of Arkansas tell us how difficult it seems to be to get to a big spending package. Joining us are Bloomberg Politics contributor Rick Davis and Democratic strategist Al Motter. So, Rick, tell us what you thought about, I thought it was very refreshing to hear the congressman talk about how they're not doing it the way you're supposed to do it.
Yeah, well done, guys. I thought that was really an illuminating and informational conversation. Sort of cuts through all the weeds and smoke that exists in the caucus and in the Congress, and says, here's what we got to do. It's very simple. And from the perspective of an appropriator whose job it is to fund the government. And he, of course, starts out by reminding everybody that, the fiscal year ended about a month and a half ago. And so we are way behind on schedule. I thought he also shed some interesting light on this notion of a laddered CR and these two sort of deadlines, one that we're hearing about in December and one in January. And he said something that I thought was interesting about how those would be potentially like omnibus bills that would be packaged up together to meet those two deadlines, depending upon, the agencies that they were covering. And gosh, that sounds complicated. I know it's coming out of the, Andy Harrison, another appropriator who, has come up with this idea, but I honestly could not see that flying in the House of Representatives or in the Senate. So, lots to chew on for the next 10 days while we wait and see the government potentially shut down.
Well, I'm curious also, based on what the congressman said about these conversations about a stopgap measure to avoid a shutdown and what could and couldn't get tied to it. When I talk to senators, they seem to think that this is their chance to get Ukraine aid passed, tying it to the stopgap measure, do everything in one big package. Al, when Congressman Womack says, let's just do a clean CR, get to the supplemental spending stuff later, what does that mean practically for the state of congressional discussions around Ukraine aid in particular?
Well, look, the House has been consistent on the Republican side in terms of not being as supportive of aid to Ukraine as both Democrats and Republicans in the Senate and the administration, and that's a problem. It's a problem because we don't have a solution to a funding crisis that's going to escalate in a week and a day. And so while I agree that your interview with Congressman Womack was good, what I didn't hear was how is this going to be solved? I heard a lot of platitudes about what you shouldn't do at home and how rational people ought to act. But the bottom line is that the House is engaging in a risky game here and is not really operating in a reality that politically exists. And that reality is that Ukraine aid is going to be funded at some point in the next several months, whether they like it or not.
So, Rick, we heard him talk about meeting with Senator Susan Collins last night and, seemed to be open to dealing with the Senate on this. I mean, how much do you think that his viewpoint is different from the other House Republicans?
Yeah, I would say a lot different, June. I mean, appropriators always sort of get along, right? The Senate, both Republican and Democratic leadership in the Senate, and the same in the House in the Appropriations Committee. They're simple guys. They just deal with numbers. They get these numbers, from a caucus or a party that is in control, and then they apply those across the boards. And they are the classic bean counters. And in all that, as Al points out, is a bunch of policies, that some get, plussed up and given more money and some get cut. And frankly, the Senate, they've sort of been chugging away. They're still behind too, but they've been chugging away at their appropriations bills in a very bipartisan fashion. And frankly, if you look inside the Appropriations Committee of the House, it's pretty bipartisan too, as far as what their markups are. It's just they can't get things out of committees and they can't get things into floor action. So they're going to abdicate to the Senate, procedurally, because the Senate's just going to move on. And then sooner or later, they're going to wake up and realize, well, how did the Senate get ahead of us on all this stuff? How did they wind up getting the advantage of dictating terms, which includes Ukraine funding? Well, it's because the House just didn't do enough quick enough. And that's, you could almost see that train wreck coming.
Well, if I could provide one little counterpoint, I don't necessarily disagree with your point, Rick, about the House abdicating the potential advantage they have by not moving so fast. But the honeymoon period that the congressman referenced with Mike Johnson as the new speaker seems relevant. They have passed a couple bills since he was elected speaker. It sounds like maybe there's not really an appetite to push for a shutdown. Al, I'm curious if you really buy it that there is this honeymoon period in which the House Republican Conference can rally behind their new speaker and there won't be quite as much chaos because of that.
I mean, the problem they face is that there's such a small margin for error. And I mean, yeah, I guess he's in a honeymoon period, but historically speaking, speakers didn't typically have honeymoon periods of a week or 2 or 3 weeks. They were speakers for years and years. What had just happened with Kevin McCarthy was unprecedented in our nation's history. And so he may have a honeymoon period, but it's not going to last long. And those folks like Matt Gaetz and others who pulled McCarthy out of his office and shoved him into the ranks of the rank and file will agitate again at some point soon. I do think, however, that there will be a continuing resolution, and we're unlikely to have a shutdown of any significant length, if at all. But then there'll be a fight next year. In April, there will be 1% cuts unless there is an agreement on appropriation. And again, back to my comment about fantasy versus reality, the House Republicans, led by Speaker McCarthy, negotiated a spending number that is not what they are now insisting on. And so if they insist on a number that was not negotiated to and say we need 1% cuts, we're going to have a problem, and Democrats won't mind to pick that battle in an election year.
Al, what role do you think Democrats will play in these negotiations?
I think we'll do what we always do, which is to point out if these cuts were put into place, and we will argue that Republicans favor these cuts, here are the people who will be hurt. People who get food stamps, people who are dependent on SNAP, which is a food program, people who are dependent on the government for health care or for Social Security, or perhaps people who care about our national parks, or perhaps people who care about government employees being paid. We'll have a whole litany of examples that will be harmed adversely impacted if these across-the-board sequester cuts go into place. And then, if Republicans play the game the way they often do, there'll be a shutdown, which will then lead to more examples of harm and disadvantaging people across America. And it's not a winning game for them. I get why the conservative wing wants to do what they want to do, but ultimately, politically, this always seems to benefit us.
Right. Rick, real quick before we go, do you see this getting dragged out in, a full year CR or going to April? What's the actual timeline, do you think?
Well, that's the funny part is that nobody, even Republicans, don't like full year CRs because then their favorite programs don't get funded. So that does tend to be a problem, especially the military budgets, the Department of Defense. And so I don't see that happening. I think that they'll come to some kind of a deal. But Al's right. I mean, they got to come to grips with the fact that they already cut a deal on the top line numbers. And it sounded like Steve Womack earlier wasn't alluding to the fact that they were going to apply a cut on top of that. But of course, you never know, right? I mean, you've got the crazy eights, the people who unseated Kevin McCarthy, who are still there. And we're going to see what kind of honeymoon they give to the new speaker. But I don't think we've heard the last chapter of discord within the House Republicans at this stage.
We'll have more with our panel, our politics panel, with Bloomberg contributor Rick Davis and Democratic strategist Al Motter. And we're going to be talking about Election Day, what's on the ballot and what it means for 2024. But first, let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Nancy.
Thanks, June. A month into the Israel-Hamas war, and there are growing concerns about the status of civilians in Gaza, where food and water are rapidly dwindling. The European Union Commissioner for Crisis Management, Janez Lenarčič, says the flow of aid must improve.
The number of trucks that are able to enter the Gaza Strip is far too low. So far, in this 1 month, about 500 trucks have been able to enter the Gaza Strip with humanitarian aid. This compares to 500 trucks per day before.
Janez Lenarčič says humanitarian aid must be made available to not only those in southern Gaza, but wherever assistance is needed. Republican members of the House are marking the 1 month mark of the Israel-Hamas war by welcoming some of the Israeli families who were impacted by the violence. Congressman Tom Emmer spoke of his support for Israel.
To the families that were here with us, I want you to know that House Republicans are with you, and we join you in calling for the safe return of your family members and all hostages from Gaza. And to everyone else listening, let me be very clear. The state of Israel has a right to exist and to defend its people.
Emmer says Israel is justified in its goal to eradicate Hamas. President Biden has been briefed on what his advisors see as a Chinese plan to build a military facility in Oman. This is according to people familiar with the discussions. They say it's part of a broader effort by Beijing to deepen defense and diplomatic ties with the Middle East. President Biden will be meeting with Chinese President Xi Jinping next week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Federal Reserve Governor Michelle Bowman says she continues to think the central bank will need to raise rates higher to contain inflation, but added a surge in Treasury yields since September has led to tighter financial conditions. Her remarks came at an event hosted by the Ohio Bankers League. Right now, we've got the 10-year yielding 4.56%. The 2-year now yielding 4.91%. S&P up 17, gain there of 0.4%. The Dow up 66, higher by 0.2%. NASDAQ up 141, higher now by 1%. We've got spot gold down $10.50 the ounce to $19.67, a decline there of 0.5%. West Texas Intermediate crude at $77.98 a barrel, down now by 3.5%. A rally in big tech has put stocks on pace for their longest winning run in 2 years as investors shrug off the latest attempts from Fed speakers to tone down Wall Street's dovish bid. Federal Reserve's fight against inflation is not over. That's what we heard this morning from Minneapolis Fed President Neil Kashkari, a message he says he was delivered to the market by Fed Chair Jay Powell.
He's articulated very clearly that we're committed to getting back to 2% inflation, right? There's been some chatter amongst economists that maybe we should raise the inflation target. I think he's done a great job saying that is not on the table. We're not going to do that. We're going to get inflation back to 2%, and we're going to let the data guide us. We've moved very aggressively. We've made a lot of progress on inflation. We're not done yet, meaning inflation is not back to our target, and if we need to do more, we will.
Minneapolis Fed Chief Neil Kashkari was a guest on Bloomberg Surveillance. You can listen to the entire conversation on the Surveillance podcast. Uber shares after earnings, they are advancing. Right now, we do have Uber shares up by 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
I'm June Grosso in New York with Jack Fitzpatrick in D.C., sitting in for Joe Matthew. It's Election Day, and abortion rights are on the ballot, as well as state and local races that could provide a roadmap for 2024. Joining us are Bloomberg Politics panel, politics contributor Rick Davis, and Democratic strategist Al Motter. Rick, in Ohio, abortion is actually on the ballot, and voters could put abortion rights in the state constitution. But while abortion may not be on the ballot in other states, it's very much part of campaigns in states like Virginia and Kentucky. So what will the results today tell us about the strength of that issue in 2024?
Yeah, well, I think you could wind up with three different scenarios, right? I mean, the abortion supporters could win out, and so they win the initiative in Ohio and the support of candidates they're backing, as you said, in places like Kentucky and Virginia. Virginia, of course, very close to determine whether or not the Senate and the House are in Republican or Democratic hands. And of course, that would then indicate a willingness or not of the legislature to support Governor Youngkin's views of putting some limits on abortion that currently don't exist in Virginia. So it's a big task. Now, the other option is also available where Republicans and abortion opponents win out. And of course, that would take a lot of wind going into the 2024 election for Democrats who hope to use abortion again in that election as a means of getting people elected. Then, of course, the third option is just a mixed bag, right? All these states kind of do a different thing, and there's not a clear path. And I would actually expect that to be the most likely option, only because I don't think there's the intensity with the vote right now. It's certainly not seeing it in the polls that would indicate that you have that driver, post Supreme Court decision of 2 years ago going into the 2020 elections, where you had enormous energy and turnout by certain groups that were supportive of abortion. Just don't see that happening right now in the polls, but we'll know tomorrow.
Al, from a Democrat's perspective, do you think that Democrats are going to be looking at the Ohio results of this ballot initiative and using that to any degree to decide how much to emphasize abortion access in 2024?
I do. What's interesting about the Ohio referendum or vote is that this is the first initiative in which Democrats are pursuing a constitutional right. All of the energy that Rick was referring to in the 2022 election came in opposition to concerns that Republicans wanted to restrict abortions to either no opportunity at all, or essentially, in fact, no opportunity at all, with draconian restrictions up to 6 weeks. In Ohio, the vote is on a constitutionally protected right. So that's an affirmative vote. And I'm curious to see how far the movement goes. But I will say it's crafted to reflect the law pre-Dobbs. And should it pass, Ohio will essentially have a law that reflected the law under Roe v. Wade. And so I think it has a decent chance of passing. And I would note in the Virginia races where Governor Youngkin is trying to flip the Senate and gain a Republican majority, he may have honed in on what is, in my opinion, the best political position for Republicans, which is to support a 15-week ban, which is in essence what I think Chief Justice Roberts was trying to do when the Dobbs decision was reached. And perhaps, and this is not conventional wisdom, but perhaps a Republican clerk or justice office released the draft decision because they were trying to stop that. And they ultimately voted 6-3 for a more restrictive outcome.
A lot of legal scholars think that that's what happened, that it was a Republican who leaked that. So there are a few important governor's races in the South. In Kentucky, Governor Andy Beshear, one of the few remaining Democratic red state governors, is running for a second term against Republican State Attorney General Daniel Cameron, who's a Trump-backed conservative. And though not explicitly on the ballot, abortion has featured prominently in the campaign. So, Rick, can a popular governor overcome the national negative trends on Biden in a state that Trump won by 26 points?
Yeah, I would say it would really be amazing if he can do that, because in addition to that big Trump win in the state of Kentucky, and obviously every other statewide elected official is a Republican, we are in a period of time where that just doesn't exist anywhere in the United States anymore. There are only 5 states now where there are mixed statewide elected officials from one party and the other. I mean, we used to have that normally in 25 states where maybe 2 of the senators were from different parties, or the governor was a different party like this case, and the senators were from another party. We've turned into such a polarized country that right now, I mean, if you have a governor and 2 senators and a majority of your delegation is usually in one party, and that then translates into state legislatures. All politics is national now, and so if Governor Beshear can avoid that, he'll prove the negative in a way that I just think is very hard to predict, and more likely the norm takes hold, and that is that it gets rationalized back to being all statewide elected officials in Kentucky are going to be Republican.
Al, real quick before we go, I do want to follow on Kentucky. Andy Beshear looks competitive, surprisingly competitive for a Democrat in Kentucky. How much does the Beshear name help him? His dad was governor. I'm wondering if he's an exception to the rule because of such a strong identification with the Beshear name there.
I think that's right. And I think polling shows this. He's very popular in Kentucky, which means he must be doing something right as the incumbent governor. And so generally speaking, it would be tough for him, but he's not on the ballot next year when he'd be competing against a Republican nominee at the top of the ticket. And if you were a betting man, and I am, I would say that he's slightly favored to win. And it would be remarkable in a sense, but also not surprising because he's delivered results for Kentuckians and he's immensely popular, as I said.
Well, thank you both. That's Bloomberg Politics contributor Rick Davis and Democratic strategist Al Motter. We will see if any of these predictions come true tomorrow. And coming up next, we're going to be talking more. There's another state where a Democratic contender has a very famous name. That's coming up next.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pelletin. A rare move. Apple has hit pause on development of next year's software updates for the iPhone, the iPad, the Mac, and other devices so it can root out glitches in the code. Sources tell Bloomberg the delay, announced internally to employees last week, was meant to help maintain quality control after a proliferation of bugs in earlier versions. Right now, Apple shares, they are trading higher, up by 1.7%. Uber delivered a mixed picture of its business this morning, showing a second consecutive profitable quarter and an increase in demand for rides and delivery, but also slowing revenue growth. CEO Dara Khosrowshahi talked about the quarter on Bloomberg Television.
We saw strength all over the world, but we saw particular strength in the Asia-Pacific regions and Latin American regions as a result of some of the newer products that we've introduced, taxi, two-wheelers, motorcycles that, are Uber motorbikes that can whiz through traffic, etc. And then on the delivery side, our gross bookings grew 16%, again, an acceleration over Q2 when they grew 14%.
And Uber shares, they're up now by 2.9%. Lyft shares, also based in San Francisco, Lyft up by 1.5%. WeWork was once the biggest private office tenant in Manhattan. Now it is moving to nix dozens of pricey leases in New York immediately after filing for bankruptcy. Dormant locations in New York dominate a list of nearly 70 leases that the co-working giant intends to terminate. Those are our top company stories. This is Bloomberg.
This is Bloomberg Sound on Bloomberg Radio.
I'm June Grosso in New York with Jack Fitzpatrick in D.C., sitting in for Joe Matthew today. Coming up, we're going to tell you about the famous name, in fact, the very famous name of the Democratic candidate for Mississippi's governor. But first, let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Nancy.
Thanks, June. It has been a month since Hamas carried out its surprise attack on Israel. Today, Israel says it's moving closer to the center of Gaza City as the Hamas-led health ministry says the fighting has now left more than 10,000 people dead. Bloomberg's Ethan Bronner has more on the fighting from Tel Aviv.
We think that there are between 1,000 and 2,000 ground troops encircling and beginning to close in on Gaza City, trying to do away with Hamas military installations and tunnels. But in fact, we don't really know what's going on right this minute. It seems to be that that's the plan.
Bloomberg's Ethan Bronner in Tel Aviv. As you've been hearing here on Bloomberg Sound On, voters are going to the polls today in several states with key offices on the line in Kentucky and Mississippi, where they're selecting a governor. In Virginia, every seat in their General Assembly is on the ballot, and Republican Governor Glenn Youngkin's future in politics may depend on whether there's a red wave or a blue wave. He's been mentioned as a potential presidential candidate, if not in this next election, possibly in 2028. Donald Trump may be accused of overvaluing his real estate empire in New York, but the former president himself is getting richer than ever. We get more from Bloomberg's Nathan Hager.
The former president has gained $500 million on the Bloomberg Billionaires Index, moving up from $2.6 billion just after he left the White House in 2021 to $3.1 billion today. The former president's move to Florida came at the same time as a boom in the Sunshine State. Revenues at his golf courses, including in Florida, have jumped more than 50% since 2019. And the sale of Trump's Washington, D.C. hotel and loan repayments have left the former president with more cash and less debt than any time in the last decade. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, June and Jack.
Thanks so much, Nancy. Well, the famous name is Presley. The Democratic candidate for Mississippi's governor, Brandon Presley, is Elvis Presley's second cousin. He's facing Republican Governor Tate Reeves, who's seeking a second term and is knee-deep in corruption scandal as the state is facing another health care crisis. And Jack, can a famous name, a very famous name, especially in Mississippi, win over the Republican governor? But the Republican governor has a lot of problems.
Yeah, I can't believe that I started talking about famous names and went to the Bashir name in Kentucky first. But it does, if I'm looking at the polling lately, I think I was right to lead. If you're ranking Democrats who could win in a red state, the polls have looked better for Bashir. It is a surprisingly close, potentially, race in Mississippi, given that it's Mississippi. But I'm looking at the 538 rundown of recent polls, and Reeves is leading in 4 of the 5 most recent polls. There was one that had them tied back in August. So it seems to be a heavier lift for Democrats in Mississippi than in Kentucky.
And there's a state where abortion is not on the ballot or being discussed because they both oppose abortion rights. Although Presley, it feels funny to say the name Presley without introducing a song or something. Presley has said that he would expand Medicaid and cut regressive grocery taxes. But still, I guess we don't have to watch that one too closely tonight. I do like the off-year election, though, because you can watch the trends instead of the people so much.
Yeah, there's clearly a thread to weave for a Democrat running in a red state. I think that makes the Ohio vote on abortion access much more interesting. Ohio, not the classic swing state that it used to be, but it is still probably a more interesting one on abortion access than Mississippi.
I think it will be really a phenomenal thing if they actually put abortion rights in that state's constitution after we've seen the way the state has trended. So it's going to be an interesting night to watch all these things. And we'll talk more about this.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome to Hour 2 of Sound On this election day in America. I'm Kaylee Lines alongside Jack Fitzpatrick today as Joe Matthew takes the day off, maybe taking the day off so he can vote as Virginia and a slew of other states head to the polls for an off-year election that could send some pretty important signals about 2024. We'll be joined this hour by former Virginia Governor Jim Gilmore and Ipsos President of Public Affairs Cliff Young. They'll break it all down for us and assess where exactly it is that voters stand. Plus, it's not just Election Day, it's also launch day for a new Bloomberg podcast, Elon Inc. It'll bring the latest, most important stories about Elon Musk and his empire, and we'll have more on that with the podcast host, David Papadopoulos. All of that is coming up, but first we have to get a check on the markets, and as always, we head to New York